So much for the familiar. The cadaver was then encased in blue gelatin and frozen to -160 degrees Fahrenheit. A custom-designed cryogenic macrotome was used to remove 1 mm sections of the rock-hard block, revealing slice by slice the beauty and detail with the current image working together and feed the knee joint. As the mechanical
No. Hypothalamic.
Challenger. Yo, excuse me. Hey.
Hi.
Hi, your car is awesome. What do you do for a living?
Thank you. I'm just sharing a lot of these people in my videos.
Okay, so you do videos.
Yeah.
Can you explain a little more? Like, what kind of videos do you make?
Maybe you know the Black and Orange website, very popular, like YouTube.
Oh, Black and Orange.
Yeah.
Oh, like YouTube. Oh, okay. I know what you're talking about. Okay, that's one way to say it. Okay. Thank you so much. I appreciate it.
Market. The key here is whether the regulator feels obligated to also regulate activities in there, because there things are moving much faster, sometimes transparently, sometimes not terribly transparently.
And no government, including the Hong Kong government, especially the Chinese government, does not want their retail investors to get burned what some might perceive as a Ponzi scheme.
Correct. A lot of Ponzi games there, and they imported a lot of things from our old finance, histories. But on the other hand, younger generation, they may not mind wanting to explore the wild, wild west. And I don't really think they're coming back. So I don't really think we should be holding on to the notion that somehow we have to bring our set of regulation over there. We need to find a new way to regulate and fully understand it. And I need the leaders there, intellectual leaders there, to fully respect that if you really want a lot of money coming from this side of the world to their side of the world, they better really give comfort to people on this side of the world that it's not going to be something that is going to be ripping off everybody down there.
Hong Kong has taken its punches in the last few years. Where do you see Hong Kong right now on the evolution of opening up? Obviously, when you were the CEO of the Hong Kong Exchange, you oversaw the purchase of the London Metal Exchange, the LME. You also oversaw the Stock Connect and Bond Connect and the like. Is this opening up and this change towards digital assets one of these revolutionary points in Hong Kong's history financially that could be a big springboard, or are we going to still be taking our lumps for a while?
I think the worst for Hong Kong is probably over, because we have had a number of really bad years for a variety of reasons over the last 3-4 years. So I think we're finally coming out of the valley. But I do think going forward, the market itself needs to restore a lot of confidences that have been lost with investors, and that pause that seems to be a lot of institutions have put on China investing need to be lifted, and I think it's being, is going to get lifted soon. But in terms of the future, while crypto is clearly one exciting area, but what happened there in the last 6 to 12 months also demonstrates to you that it's not going to be a very easy run yet, because there you haven't found a real big business case to massively use that technology and use that new philosophy. So I think China's new way of doing things is the digitalization of its own real economy already today. At the revenue level, for the little guys,
that's what you're doing. That
would be a revolution. Yes.
At Micro Connect.
Yes.
And it's interesting, earlier on you said essentially Hong Kong's being allowed to do what the mainland is not necessarily allowed to do on the cryptocurrencies. But obviously shadow financing in mainland China has been a big risk. And you saw what Xi Jinping and the government in Beijing did to crack down on the shadowy lending by the platforms, whether it's Alibaba and others, and the giant pool of money and the risk that is associated with shadow lending. How do you see the more quiet behind the scenes digitalization in China helping the small to medium-sized enterprises that need that funding, but then the government squelches it off because it's a risk?
Yes. I think China's technological standing today is so advanced that you are able to allow finance to go into veins of the blood system and help the little guys now. The problem with the last 5 years, maybe 10, with all the internet financing, the P2P financing, all this effort is all about, not about necessarily absorbing the risks for the system so that the banks, the public equity money, and the money that can go to the little guys are risky individually. So we need to find a way to create portfolios of little guys so that as a portfolio is not as risky as individually. But the issue here is that we have all been using fixed income as a tool to finance them. And then everybody's using government's money or public money or banks' money and charging a free, risk-free arbitrage of interest spread. Yeah. That's the wrong model. We need to have a system where we absorb the risk, and then you can take the upside, and then let the banks take the reduced risk of the portfolio, and then the bank's money can actually help the little guy, but you need a cushion in the middle to absorb that. So that's what we're doing, distributing those financings as if it's equity. We have to take the downside. If something doesn't happen with the little guy, we don't get paid. Yeah. You cannot charge an interest-free and a risk-free interest spread. You need to put your equity money in there, and then turn around to tell the banks to say, those great portfolio has been created with minimum risk as a portfolio, then you can gradually buy them out. So it is that almost what I call virtual equity that you can create for all the little guys, that can the banks finance them now.
Very, very quickly. Yes. Is the average global investor getting China wrong? Do they see Xi Jinping killing the Chinese economy through its overregulation? You see it differently?
I don't see whether anybody is wrong, but communication clearly has failed. I think the redistribution story or the common prosperity, we are talking about not redistributing people's wealth that is already legally acquired by private sector. That's not the point. The point is redistributing resources that is still in state's hands, in public hands. That's the key of the redistribution of our common prosperity, because we have a lot of unpaid debt to our rural populations, to our environment, that need to get fixed, but the money is going to come from the public sector, rather than is going to say, oh, you already become rich, let's take money from you. That's not what's happening. If people think that's what's going on, that's wrong.
Charles Lee, MicroConnect founder and chairman, former Hong Kong Exchange CEO. Let's do it again. Always great to talk to you. Yeah. All right,
okay.
FinTech Week, wrapping up day one. Well, for us, we'll be back tomorrow.
Well, that's right. Looking forward to it. Bloomberg Stephen Angle with MicroConnect founder Charles Lee, who says the crypto space is an exciting area, but bear in mind, both Hong Kong and Singapore are adopting different approaches, different regulations. It will force players to make a stand where they want to be. Plenty more ahead. Keep it here with us. This is Bloomberg.
I've always been a person who's just been attracted to hair. I like to sit and think and theorize how I can manifest.
Bitcoin is mined.
Bloomberg Crypto, Tuesdays.
From New York City.
From London, in Sydney.
In San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening. Here's what I'm watching. You do not want to miss this story.
How are you thinking about those dynamics?
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg. All right, that's what Shanghai looks like at the moment. And we're just heading off for the lunch break, of course, here. And just seeing not much reaction really overall to what we had in terms of those PMI numbers, weaker than expected really across the board. And certainly we look at the components within those PMI numbers and found that it was the new orders, the forward-looking ones, which perhaps were the most worrying, as they were way below the figures that we got before here as well. Just to recap, and PMI for manufacturing, 49.8 was expected, 49.2 is what we got. Non-manufacturing was 48.7, 50.1 is what we were looking at here. And I said the weakness there partly coming from the new orders complex here. So China's going off for lunch. Tokyo returning back to the fray. As it.
Well, that's right. In the broader market, it is trepidation as we await that Fed decision on Wednesday. 75 basis point pretty much priced in. The Nikkei 225 back from lunch, as you said, up by about 1.7% right now. A lot of optimism about earnings. Those earnings have come in better than those we saw in the U.S. The Hang Seng up by 0.4%. Taking a look where the yen is trading right now, 148.05, a tad weaker versus the USD by 0.3%.
All right, this is a company we're looking at now, which is at its largest one-day percentage fall since it listed. At one stage, it was down over 30%. It's now 23% to the downside in the session. There we go, 24%. We've got this as billionaire Wu Yajun stepped down as its chairman. It all does underscore investor concern about the health of the company. Loretta Chen joins us now. She's Bloomberg News bond and loan reporter. Loretta, give us the overall take as to what happened. This really stunned people, with the chairwoman resigning.
Yeah, so Wu resigned over the weekend, and she was once the most prominent billionaires in China's property market. She founded this private developer Loan4, and it's still today it was still considered one of the and remember it's one of the last standing developers that has an investment grading in China among the private
one of the more respected ones, if you will, and one that was seen as more sound financially speaking.
Yes, and Loan4 has just recently sold a 1.5 billion yuan guaranteed bond, and it told the investor actually just this month that it's planning to sell more.
Loretta, what does it say about the outlook for the real estate industry? Is there reason to be optimistic?
Well, I think the recognition of Wu, she's citing health reasons, but whatever reason it actually is, it really is a signal of a loss of confidence for the broader property market. Loan4 has reported actually still stable earnings. I think its home sales are slumping alongside the broader market, but it's already fared better than most of its private developer peers. I think the worry here is that the cash flow situation in the company into next year will continue to worsen. It doesn't have any near-term debt payment pressure, but it's very hard to say for 2023, and that really signals the entire outlook for the Chinese property market into next year.
Yeah, and Loretta, I mean, the resignation here comes against a backdrop. Citi just put out a note saying that they look like the liquidity concerns are overdone here. They've got a strong balance sheet. They're talking also about how this company has third quarter gross sales as well, doing okay here. So it does seem a bit counterintuitive.
Yeah, I think in a way, if you're looking at, again, the near term, they don't have any imminent pressure. But remember that, coming into 2022, at the beginning of the year, nobody expected stronger developers such as Sifi Country Garden would run into, the kind of pressure in the market as we're seeing. Sifi has recently just defaulted on a convertible bond. So it's really hard to predict, even though in the near term, it seems like the company's financial situation is stable. It's hard to say for the next year.
Loretta, good stuff. Loretta Chen there joining us. Going to just take a look at something completely different as it were. And we're looking at parts of the commodities complex, chiefly those in the agricultural side of things on a bit of a tear. Let's find out why as we get to the first word news with Sue Keenan in New York.
All right, thank you, Rich. We start with Turkey and the UN, which are looking for ways to salvage a deal to safely export Ukrainian grain. It follows Moscow's decision to leave the pact following an attack on its Black Sea naval fleet. Russia said it was suspending the agreement after its ships were hit by drone strikes it blamed on Ukraine. The extent of the damage to the vessels remains unclear. Meanwhile, Bloomberg has learned that Elon Musk is preparing a round of layoffs at Twitter just days after taking ownership of the social media platform. A source tells us the billionaire asked managers to list team members who could be let go. Separately, Axios is reporting that Musk plans to cut up to 30% of staff in some departments, with product and engineering management set to be severely trimmed. China will host top foreign leaders this week as President Xi Jinping kicks off his third term, in which he has vowed to increase the nation's global influence. Now, Vietnam Communist Party chief was due to become the first foreign leader to meet Xi since the leadership reshuffle. He's also expected to meet this week with Pakistan's prime minister, the German chancellor, and the Tanzanian president. Macau residents have been ordered to do 3 days of rapid COVID tests beginning on Sunday. This after 3 new cases were found. The new cases are dampening hopes the gambling hub could soon allow tourists back from mainland China. Officials locked down the MGM Cotai Resort after a worker there tested positive along with her 2 sons after a visit to the mainland. Staff and guests are being put in quarantine. And China has updated a decades-old women's law days after the Communist Party excluded women from the elite Politburo, this for the first time in 25 years. The latest amendment to the Women's Rights and Interest Protection Law prohibits restricting the promotion of female employees due to marriage or maternity leave. The revised law will be adopted beginning in 2023. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg. Now, South Korean President Yoon Suk-yeol has promised a thorough investigation and support for those affected after a crowd crush during Halloween celebrations in Seoul killed more than 150 people. Bloomberg's Hee-Soo Lee joins us now. Hee-Soo, take us through. What's the latest?
Well, an enormous tragedy happened in the capital of South Korea. At least 154 people were killed and many others were injured in a crowd crush during Halloween festivities last Saturday. Authorities say the death toll can still rise. The victims were crushed by a massive crowd pushing forward in a narrow alley in the nightlife district of Itaewon. This year's Halloween came right after Korea lifted COVID restrictions requiring outdoor mask wearing, and that drew tens of thousands of people to the area, a much bigger crowd than previous years.
Hee-Soo, what's been the response from the government?
Well, President Yoon Suk-yeol has declared a period of national mourning from Sunday and vowed to carry out a thorough investigation to identify the cause of the crush and also prevent similar events in the future. He also designated Itaewon as a special disaster zone to make sure that authorities have the access to emergency relief and render aid to the victims.
I mean, at this time, does it have any read-through for the economy here, Hee-Soo? I mean, are there any implications?
Well, so far, companies like Samsung C&T and Hotel Lotte have canceled Halloween-related events at their theme parks, and Starbucks Korea has also halted promotions of products related to Halloween. Local authorities have called off Halloween parties, and also the opening the ceremony of the Korea is one of the biggest sales festivals. Some experts say that this incident can refrain people from going out and consume, but for now, we have to wait and see what the full implication this will have on the economy.
Thank you. Hee-Soo there for us in Seoul. Going to tell you now what we have coming up next on Bloomberg Markets, having a look at what's next for Traction Technologies after shares fell below their initial public offering price at the end of last week. We're going to be joined by the chairperson and managing director, Neha Singh, next.
No one covers the world like Bloomberg.
Because Trussonomics is being dismantled, MPs behind the scenes are asking what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping said complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Just under 5 minutes to go before things get underway, trading-wise, at least for Indian stocks. There we go. Futures indicator, we're going to be seeing some gains, really reflecting what's going on in the broader region here as well. We've got a lot of things to be watching out for today that should be garnering investor attention. Let's have a look at some of those companies reporting their second quarter results. They include the likes of Bharti Airtel, Tata Steel, and Larsen & Toubro. Now, also on the government side, we're going to be looking at the administration in India updating the April to September fiscal deficit, along with September output numbers as well for something like 8 core industry groups here as well. Plus, Prime Minister Narendra Modi launching railway projects worth over $350 million and doing that in Ahmedabad. Nifty futures, there you go at the bottom of your screen. And I think, Senna, we're going to be looking at Traction Technologies next.
Well, that's right. We're focusing on Traction Technologies, a global market intelligence provider for a private company. The company made its trading debut on October 20th, gaining as much as 25%, but the stock has since been on the downtrend. Its renowned angel investors include Ratan Tata and Flipkart's co-founders, Binny and Sachin Bansal. Joining us exclusively now is Traction Technologies chairperson and MD, Neha Singh. Neha, good to have you with us. We know that with the fallout in the technology sector, metrics for fintechs, for startups have changed. It's no longer about being the next unicorn. What do you make of the changing metrics right now? How are you looking at it?
Thanks firstly for having me. So if you look at in the private market also, yes, there has been a decline which has happened just as in the public markets in the technology stocks that's there. Even if you look at in the private market space also, there is a decline. Like in India, India is also mirroring the global sentiment in this space. So if you look at Q3 in this year, there is nearly a 80% decline if you compare to the Q3 of last year. So yes, that sort of sentiment sort of continues. So that's very interesting that probably VCs and investors are sitting at an all-time high dry powder because they had raised a lot of funds last year. But if you look at the deployment, that has been very slow. I think it's a combination of a couple of things. One is there are a lot of crossover funds who have exposure in the public markets as well as in the private market. They have gone slow. For instance, SoftBank being one of them have talked about that they will be slow in investing. So that's one bucket of investors who have had exposure to the public and the private. And I think the other one is because of all the interest rate. There's also renewed interest in people and investors looking at positive unit economics in not just growth but also profitability.
So having said that, how is it looking for Traction? How is it looking in terms of the prospects for the company going forward?
Yeah. So we had the IPO just about 10 days back. So of course, thankful that we were able to do that despite the markets being fairly tough. And I think one of the reasons why we were sort of very excited about hitting the public markets because even though 70% of our revenue is actually outside India, but we thought Indian public markets will like this kind of story because of two things. I think one is the private market is becoming fairly sizable. So if you look at private market AUM, that has crossed $9 trillion globally. If you compare it to the public listed market cap, that's about $100 trillion. So private markets become nearly 10% of that in terms of the size. So that's fairly sizable from a few single-digit million earlier. So public obviously provides you a platform that you can continue to build the company. And I think the second thing is that in the financial data, you've seen that you can actually build sort of profitable companies by selling data to investors, and we are doing that in the private market asset space. So the other thing is that Indian public markets typically also like sort of profit stories. So I think that is why we had started the process a year and a half back, and given sort of the changes in market, we finally hit the market about 10 days back.
So Neha, give us a sense of what you're seeing there, in terms of liquidity, in terms of appetite, and also, of course, with higher interest rates that are fundamentally behind all that, and how it's playing out.
So it is fairly, if you look at the IPO market in India, that has been fairly slow if you compare to last year. So till, in this year, though, the number of approved DRHPs, which is the first step that you have to do when you are looking to list in India, the approved DRHPs is at an all-time high of nearly, more than 70 companies which have got approval. But if you look at the number of IPOs that have happened in the last, this year, YTD, in the last 10 months of this year, it's only about 23. So, that's like a 50% decrease. So it's still fairly, I would say investors are getting fairly conservative in the companies which are hitting the market. I think a couple of reasons. One is the FII flows have also been, last year, most part of the last year it was positive. It started dipping and the FIS has started pulling off money, end of last year. So that has sort of continued. And obviously, given, the markets are also sort of flat to YTD, the investor appetite is fairly, so they're looking at more profit stories than just the growth. And that is why you also see some of the companies also pulling out, withdrawing their DRHPs recently.
So which are the ones which are going to be successful looking ahead? Which are the ones which you are seeing success with? And which are the ones which, as you just said, have been pulling some of their applications?
So interestingly, we are seeing a lot of traditional companies. So the number of tech companies that have hit the markets have been fairly limited. If you compare it to last year you saw a lot more, venture-backed companies, tech companies hitting the public markets, having fairly successful sort of initial listing. This year, that has been fairly slow. And we've also heard about talks about companies postponing their plans of hitting the market. So we are also seeing a lot. Firstly, we are seeing sort of reduced activity, and the other one is more traditional businesses are also like the majority of the companies which are hitting the market.
Now, I think if memory serves, you helped us here at Bloomberg compile a Deadpool list of some of these waning startups. Are we there again? Can we expect another one of those?
Yes, so that is something that we continue to track very actively. So we had spoken about the dead pool list, which had happened about 5 years back, and unfortunately this year has also been fairly tough. So this year we already tracked over 1,000 companies globally which have gone dead pool, which have raised over $1 million in venture capital and private equity funding. And just for putting that into perspective, so this year there has been 1,000. Last year, if you compare to the same period, there were only about 100 companies. So yes, unfortunately, because of the private funding sort of fairly come down, you are seeing a lot more companies hitting that unfortunately going dead pool.
Thank you so much for joining us. That's Andy Hessing there. Great to have you on the program, Traction Technologies Chairperson and Managing Director. Going straight to the Indian Open, about 3 minutes of trade gone, and we have at the moment, well, gains really across the board. We've got the banking index there just slightly underperforming, but overall we've got some companies there also making headlines. We've got certain ones like Vedanta falling there after its profit missed estimates. NTPC down in the session to 2.1. Maruti and ITC, the other ones that we're looking at as well. Lots more on the way. This is Bloomberg.
Today's CFOs are reshaping the C-suite, positioning companies to meet the next generation of challenges, breaking out of traditional roles to become chief future officers. Duke Energy has an ambitious plan to transition to clean energy, and new CFO Brian Savoy is ready to lead the charge.
We're going to invest $145 billion over a decade. There's a lot going on, but I wouldn't have it any other way.
Watch Chief Future Officer Wednesday on Bloomberg. Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
It is a tale of two cities. Hong Kong moving to legalize retail trading of digital tokens, just as Singapore looks to impose fresh restrictions on consumers. I spoke with Singapore's central bank chief, Ravi Menon, and the city-state looking to limit risk to retail investors.
It depends on what we both understand the crypto hub to be. If by crypto hub you mean we want to be a hub for digital asset activities, for application use cases in cross-border payments, in trade finance, in post and pre-trade capital market activities, yes, we still want to be a crypto hub. If you mean we want to engage in more tokenization of real assets and financial assets, to fractionalize them, to monetize their use, monetize them, yes, to unlock economic value, yes, we still want to be a crypto hub. But if you mean whether we want to be a hub for the trading of cryptocurrencies, no, that's not part of the vision. We did not state it so emphatically before, but now we are stating it much more emphatically. We don't want to be a hub for mere trading of cryptocurrencies. Right? But there's a whole digital asset ecosystem that we are actively promoting.
Is Singapore losing out in terms of being a crypto hub to the likes of Dubai, Australia, Japan, which seem to be more open, even Australia, in terms of its regulation even? I mean, what does Singapore offer that they don't?
Well, I don't think we set ourselves out to compete with other jurisdictions, especially on regulation. We have to do what is right for us, what is necessary to contain the risks. And the risks are primarily harm to retail investors. There is some risk on money laundering and terrorist financing. I think on the latter, almost every jurisdiction is on the same page. I don't think any jurisdiction is considerably lax when it comes to anti-money laundering controls. We have tighter controls on retail investments. And today, you might have just seen the latest round of measures. I think they would be among the strictest in the world with respect to retail access to cryptocurrencies. And we think that's necessary. But I don't think the crypto industry is looking at only that. And in fact, those players who are only looking at selling to retail investors will probably not come here. They'll move to other jurisdictions. And we wish them very good luck. But those who want to do the things that we mentioned, I think they will find Singapore a compelling place. Because I think the facilitation that we make for innovation through, say, Project Guardian, Project Dunbar, and so on, where we are working actively with industry to experiment, regulator and industry working together to experiment in use cases for digital assets. I think that is not easy to see in other places.
But isn't it important to also include retail, to be part of that ecosystem? Retail also gives you the volume, that gives you the profit for these companies as well, and that allows it to function.
Yeah, so we're not saying it has no place, which is why we continue to give licenses to these players to trade in cryptocurrencies. We've not banned it. We've just put stricter guardrails. I think it's going to reduce the volume of trading. I think the main point we're making is that we accept that cryptocurrencies have a place in the larger digital ecosystem because they are the tokens native to the blockchain that power much of this activity. They need to have an expression, let's say, in the formal financial sector and access to investors. Hopefully, we more accredited investors and institutional investors rather than retail investors. So they do have a place and we allow it. But I think we do need to tilt business models towards use cases where the revenue stream comes mostly from those use cases.
we go, Hassan, of course, talking to the Singapore Central Bank or Monetary Authority of Singapore Chief Ravi Menon. And of course, in Singapore at the moment and here in Hong Kong, we have FinTech Week. We've got big name guests coming up right here on Bloomberg as we've got the hosting of those summits. Tuesday, going to be seeing Invest Hong Kong's King Leung joining us. Then, as well as that, we've got Pacific Century Group's Richard Lee. Hassan, what have we got coming up in Singapore?
Well, not to be outdone, in the Lion City Wednesday will bring us the Singapore Monetary Authority's Nendo Mohanty and U.S. Commodity Futures Trading Commissioner Caroline Pham. So it's going to be a packed week, FinTech front and center, both for Hong Kong as well as the Lion City, as they go neck and neck in that space. Taking a look at what we are looking at in terms of market movers. Macau casinos are front and center on the back of rising COVID cases in China. Win Macau, though not to be outdone, currently up by more than 4%. Sense China also in positive territory. We're also tracking commodities. Here's how it's looking for the commodity space under tremendous pressure as we await the Fed decision on Wednesday. Will it, won't it cause a recession down the line? Aluminum futures currently down by more than 3%, Rish.
Yeah, part of that perhaps down to that weaker than anticipated PMI data coming out of China a short while ago. In fact, that was about an hour and a half ago thereabouts. You can see the equity markets on the up. We got a gain here of about 0.8% for the leading index of Hong Kong listed shares. We do have a little bit of dollar strength as well. Bloomberg Daybreak Middle East is next.
So you've built a successful company, but you might not want to run it for the next 10, 15, 20 years, or do you? And if you didn't, would you want to go into government? If the president called you to serve our country, would you go into government, or would you start another company?
I love what I do. And I feel like I have this luxury with 23andMe that it keeps evolving. You know, we started out just as a consumer company. We're thick in research. We got into drug discovery in 2015, and now we're getting to the delivery of care. So I've been really lucky with 23andMe that it's been endlessly interesting. And I'm surrounded by incredibly talented, brilliant individuals where I learn from them. And what I always advise people to do is like you should take jobs where you're learning. And if you stop learning in a job, then you should quit. And like frankly, when people leave 23andMe, like I say, if you're not learning anymore, you should move on. So I'm 100% committed to 23andMe. That said, my other passion is other direct to consumer. Like I want to build out a true consumer empowered healthcare world, like one that is outside of the existing system. And there's no greater force than government.
Is it possible the industry is in an arms race that will lead to spending itself into an oversupply? I mean, that has happened before.
We've looked at this very carefully, and the digitization of everything. Tell me what aspect of your life, Emily, isn't becoming more digital?
Well, I'm trying to prevent that, but yes, I think it's happening.
And COVID has accelerated that. The industry cost $500 billion last year, the semiconductor industry overall, and estimates are $1 trillion, a doubling by the end of the decade at that point. I believe those estimates. It's not that there's not going to be some blips and turns on the way, and the majority of that is driven by leadership process technology, of which only 3 companies can satisfy that need.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Daybreak Middle East. Our top stories this morning. A big week of central bank action ahead with jumbo hikes expected from the Fed and the Bank of England, even in the face of mounting recession risks. Lula da Silva narrowly beats Jair Bolsonaro to make a stunning comeback as Brazilian president. However, Bolsonaro is yet to concede. Egypt's pound extends losses to depreciate as far as 24 to the US dollar for the first time, as speculation whirls over where the currency will level out. And in an exclusive interview, Qatar's energy minister slams European proposals to set limits on the price paid for natural gas as hypocritical.
Free market is always the best solution. And if you try to fix the market, you're going against all the anti-competition laws that the Europeans were trying to put on buyers, on sellers, and now they're doing it themselves.
So you're saying it's a bit hypocritical to a degree?
It's not a bit, it's a lot hypocritical.
It's got 8 a.m. across the Emirates. I'm Yusuf Gameluddin in Dubai. Manus Krani is at the ADIPEC Energy event in Abu Dhabi. We're doing this tag team thing over the last couple of weeks. I come back to the office, you hit the road. You've got some big things lined up.
Look, Yusuf, it's, you've been here, I've been here over the years. There's a symphony playing here, and there's a quartet of issues between energy security, which is the #1 agenda. You heard from the Qatari oil minister there, which is about price caps. You then have the geopolitical dislocation of a very, very important relationship, Saudi Arabia and the United States of America, along with supply. We're careering towards December the 5th in Vienna. His Royal Highness Prince Abdulaziz bin Salman will be here, along with Masri, along with Nigeria, along with a host of other ministers. Are we moving in syncopation to a further cut at OPEC? And not least the view from the IOCs on a global recession. Oil has risen by over 10% this month. It's put in the best month's innings since 2009. So the impact of a 2 million barrel a day drawdown by OPEC is in the price. What can hit that price? Sanctions on gas, sanctions on oil, price caps coming in from Europe and the rest of the world. I'm going to catch up with Claudio Descalzi. It's been a long time. Post-COVID, he keeps ducking and diving. But of course, how secure is the energy flow to Europe? What is the sticking plaster that we have in terms of the cargoes? And what is his view in terms of where we go from here going forward for security and prices? And of course, he's involved with the Qataris on that new field just off Lebanon and Israel. So there's a great deal to discuss, Yusuf, in the backdrop that is ADIPEC 2022. I'm ahead of myself.
Always better to be ahead than behind. Manus, we'll check back in later on in the program. I want to take you from the energy prices, which are, of course, an integral part of the inflation calculus, to the broader risk caution that we're seeing in terms of movements on the S&P 500 mini. We're called a little bit lower here, about 0.1%. This is all about positioning for the upcoming Fed decision. There's a thinking at TD Securities that if the Fed can signal 75 and then an intention to moderate, that will be welcomed by the market. The Bloomberg Dollar Index picks up a little bit of strength here, about 0.1%, and US 10-year yield at 4.02. I want to widen this out. GTV go for our clients, because 10-year yields finally went down over the last 5 trading sessions after a very long 12-week rally. That was the longest weekly streak since 1984. But bond traders are going to be wary of this Fed decision in case they come out more hawkish than expected. The market's Life Pulse survey suggests that 47% of respondents are actually on the sidelines going into the FOMC. And then from there, I take you to commodities. We talked about energy. Let's talk about wheat and food prices, because over the weekend, Russia said it is pulling out of a crucial agreement within the commodity world. And that was, of course, one that allowed grain exports from Ukraine through the Black Sea. This is rippling through some of the softs here, because the deal was seen as critical for easing tight world food supplies. Wheat intraday, we were as high as 7.7%. Now we're giving back just a little bit, but still up a little bit over 4%. Let's get out to a bit of a preview, because I want to tell you about an important interview that is in the pipeline. The chairman of the Saudi National Bank. We're going to get him to weigh in on their 9.9% stake in Credit Suisse, what he thinks about the new plans at the bank, and whether they have appetite for anything further beyond that. That's happening at 9:40 Dubai time. Now let's run you through the other movements in the markets in Asia, specifically. Annabelle Drewler joins us in Hong Kong. Annabelle, how's it looking?
Thanks, Yusuf. Well, in Asia this Monday, we're actually looking fairly risk on here. And the session, even though you said that US futures are looking a little bit softer this morning, really being driven by the session on Friday, because there was a lot of optimism there around the outlook for company earnings. So that's pushing the likes of the Nikkei up 1.7%, even, of course, as we do see that stronger dollar, as traders do continue to position, buying up ahead of the Fed rate decision. In terms of other sectors that we're focusing on, specifically watching China this morning, it really has been the loan market under pressure today. And there's a few factors that are driving that. If you change on now, the first one that we're watching is what happened in the PMI data. So the official gauge is out earlier today, and we saw both the services and the manufacturing gauge slipping into contractionary territory. That was worse than what economists had been predicting, really down to this insistence on COVID zero policies from Beijing. And that again is weighing today as well, given that we have COVID cases now at their highest levels since early August. It does seem that the virus is now spreading in 2/3 of China's provinces at a faster rate, and also really weighing in regions that are very economically significant. And you'll get more on that, what's happening at the iPhone assembling factories, in just a few minutes with Emma. But then the other factor we're watching today as well is what's happening in the real estate sector, given we just saw the chairman of Longfor resigning earlier today. Now, this is the 10th biggest developer in China. It was unexpected, and so it does really indicate to us, are there any concerns or issues in this company? What does it tell us about the broader sector? So we are seeing property stocks selling off today, but you can see that dramatic drop there for Longfor. Yusuf down more than 25% at one stage at the bottom of your screen.
Annabelle, thank you for the moment. We will compare notes later again. That is Annabelle Drewler. So let's get to one of our top stories, and that is Lula da Silva, because he has won the election as Brazil's president in a dramatic comeback for the left-wing politician who was languishing in a jail cell just 3 years ago on corruption charges. Let's get more on this with Bloomberg's Clara Ferreira Marquez. So, Clara, I mean, how did it all come together here over the last few hours?
Well, we've had a dramatic comeback from Lula, very, very narrow window. He's winning, well, he has won over Bolsonaro with less than 2 percentage points. And that really is very important for us. It tells us a lot about the dramatic challenges ahead for him, both in economic terms and in terms of uniting a very, very polarized and divided country. And when you look at the electoral map, you can really see the north and the northeast, the poorer states voting for Lula as they have traditionally, but the south with Bolsonaro, really an extremely deep cleavage is there.
Yep, a lot to factor in also for the currency, which has year-to-date actually outperformed some of its emerging market peers. Clara, that's Clara Ferreira Marquez there with a little bit more insight. I want to get to China's strict COVID measures, because they may be about to hit Apple's tightly managed supply chain. Video shows that workers leaving the world's biggest iPhone plant run by Foxconn after snap COVID measures left as many as 200,000 staff facing inadequate living conditions. Let's bring in our Asia Global Business Managing Editor, Emma O'Brien, for more. I mean, this comes as a major surprise for a company that's been at the front lines of trying to navigate that kind of uncertainty.
Yeah, that's right. They have imposed what we call a closed loop, which is basically like a factory bubble at the world's biggest iPhone maker site there in Zhangzhou in eastern China. But it seems as though the workers are dissatisfied. The origination of the fracas there at the Foxconn plant seems to be with food. They did shut down the cafeteria to mitigate the spread of a small COVID outbreak in the Foxconn plant, and that led to some people in isolation for exposure to COVID not getting adequate food, as far as we understand from workers, and also to those on the production lines only being given food in boxes. So that led to a bit of a walkout, some workers deciding to leave the factory. It's unclear how many actually have left, but their departure is being facilitated by some of the government authorities who are keen that they don't just sort of fan out and potentially seed outbreaks in a city that is already dealing with basically a lockdown of the entire city already.
Truly shocking images there. Emma, thanks for that. That's Emma O'Brien there. Let's check in on the first one headline story from around the world and get out to Simone Foxman in Doha. Simone?
Good morning, Yusuf. South Korea's president has given a TV address promising a review of safety measures after Saturday's crowd crush in Seoul that killed at least 153 people. The tragedy happened in a narrow alley as tens of thousands of people celebrated Halloween, the first such festivities since COVID restrictions were lifted last month. Yonhap News says 97 of those killed were women and 20 were foreigners. Meanwhile, Indian officials now say 132 people were killed when a pedestrian bridge collapsed in the western Indian state of Gujarat. Local news reports say hundreds of people were on the suspension bridge when it gave way, with many still missing. No immediate cause has been given for the collapse, but the colonial-era bridge just reopened after renovations. President Biden has blamed political rhetoric for the attack on House Speaker Nancy Pelosi's husband. Biden says this includes denial of the 2020 election result. An intruder hit Pelosi's husband with a hammer early Friday inside the couple's home in San Francisco. The attack has put U.S. lawmakers on edge, with midterm elections less than 2 weeks away. Macau residents have been ordered to do 3 days of rapid COVID tests from Sunday after 3 new cases were found. The new cases are dampening hopes the gambling hub could soon allow tourists back from mainland China. Officials locked down the MGM Cotai Resort after a worker there tested positive, along with her 2 sons following a visit to the mainland. Staff and guests are being put in quarantine. And Bloomberg's been told that Elon Musk is preparing a round of layoffs at Twitter days after taking ownership of the social media platform. A source tells us the billionaire asked managers to list team members who could be let go. Separately, Axios is reporting that Musk plans to cut up to 30% of staff in some departments, with product and engineering management set to be severely trimmed. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Simone Foxman. This is Bloomberg. Yusuf.
Thank you, Simone. Let's get you a bit of a snapshot of what else is still in the pipeline. We're going to be live in ADIPEC, where we're going to be speaking to Claudio Descalzi, the CEO of the Italian energy heavyweight Eni. Later on, you can also hear our exclusive interview with the Qatari energy minister. But up first, we dig into the market action as investors count down to the rate decisions from the Fed and the Bank of England with OCBC's Bassem Minon. This is Bloomberg.
China's military power has been growing at an incredible speed over the last 20 years.
A strong country must have a strong military, as only then can it guarantee the security of the nation.
In terms of sphere of influence, we absolutely know that China wants to be dominant in Asia. So there is a target to get to that point, to be a military that is a peer to the greatest militaries in the world by 2035.
The competition for influence is a global one. And through a multi-decade trajectory fueled by planning, money, and pragmatism, China is building a military that allows it to shape the 21st century just as the U.S. shaped the 20th.
Right now, all central banks are playing tough and talking tough.
Investors obviously skittish as the Fed pulls away the punch bowl of easy money, and that's going to lead to a lot of mispricing and uncertainty.
We're not only in fiscal dominance in this game of chicken between Treasury and central bank, we're in what the folks at the Bank of International Settlement call a debt trap.
It's really a Fed-driven downturn that we're seeing, and it's going to take the Fed to correct it.
Maybe the Fed could signal a move towards a smaller increments of rate hikes next week after they meet.
The labor market is still strong, but it requires a Fed that has a lot more skill and a lot more luck.
That means you need to see higher unemployment. And if that's the goal, they are failing miserably.
I think the bond vigilantes are back.
TV guests with their thoughts on the Fed ahead of this week's rate decision. Economists surveyed by Bloomberg expect officials will maintain their hawkish stance, laying the groundwork for interest rates to reach 5% by March 2023. We also have the Bank of England on Thursday, where a 75 basis point hike is expected. Let's bring in Vasu Menon. He's the Executive Director for Investment Strategy at OCBC Wealth Management. Vasu, what have you been telling clients this morning about how to trade the FOMC meeting?
Well, that's a very tough one, Yusuf, because, the jury is still out. Our view is that they're going to hike by 75 basis points this week and probably another 75 basis points in December before they dial down slightly and head towards the 5% terminal rate. So with the inflation rate still running at a fairly high level, I mean, the PCE numbers, the core PCE numbers, which came out last week, we saw it running at, 5.1%, slightly below market expectations, but, quite significantly above the previous month, which was 4.9%. So inflation is still a problem. So I don't see how the Fed can, dial down in any big way just yet. I mean, unemployment is still very low, job market is very tight, and for them to do anything too dramatic just a few days before the jobs data this Friday, which may surprise the markets on the upside, I mean, it may, would be very risky for the Fed to pivot in a big way at this juncture. So our guess is that probably they're going to do 275 basis point hikes, November and December.
So the folks at Goldman Sachs have put out a note that they're saying they're expecting the Fed to hike more than previously anticipated. They're seeing the rates going up to 5% by March. The market's live team is kind of jumping on this note and asking a broader question. Have risk assets priced for 5% Fed rates?
Well, I think not fully. I mean, I think the markets have to some extent priced in inflation, to some extent priced in the 5% rate hike. But the consequence of that 5% rate, of that rate we're talking about here, is that, or perhaps even more, Yusuf, is that the economy could slip into a recession. And I don't think a recession is really priced in, because I was just looking at Bloomberg's, analyst forecast for global equities in terms of earnings, and you still see optimism. You've not seen analysts downgrade their earnings in any meaningful way. There's still a lot of optimism. And I think you need to see some kind of a downgrade, some more meaningful downgrades, before you can be confident that 5% rate hike, or rather a 5% rate with a recession has been priced. And I think a recession has not been fully priced in, and that's what worries me.
Mm-hmm. I'm looking at the China data that we got in terms of the PMI, an economy that continues to weaken. The signs are that there are going to be more strains ahead. How contingent is a year-end rally on a China that reopens up, on a China that is able to generate economic momentum again for the world?
Well, I don't think it's going to make that much of a difference. The Fed is still the main game in the markets. It's the main game in the markets. The Chinese economy has not done well. The macro picture in China has been very negative for the last, 18 months, 20 months since February of last year. I mean, the MSCI China index is down more than 60% since 17 Feb 2021. We've had a slew of bad news, and still, global equities have done well, and the markets, in 2021 at least, and the markets are very focused on what the Fed is going to do and how inflation is going to play out. So, I think a lot of bad news in China has been discounted. Of course, if China eases up the zero COVID policy, I think that's going to be really fantastic news for the global economies and global stock markets. But it doesn't seem that way. I mean, so it could be a silver lining if they ease up on zero COVID.
I mean, the other risk factor is the upcoming midterm elections in the United States. I just want to run you through a soundbite here from Larry Summers, the former Treasury Secretary. Here's what he had to say.
Frankly, the Fed doesn't listen, and if anything, feels more pressure to prove its independence. So they don't influence short-term rates and what the Fed actually does, but they do raise questions in the mind of market participants, and they raise long-term rates.
I mean, Vasu, you were saying the Fed's the only game in town. If that's the case, can the political heat get reflected in some of the Fed's thinking over the next few weeks?
Well, I think, if there's gridlock in the U.S. Congress right now, the Democratic Party has control over Congress, over the Senate, a marginal, majority in the Senate, and, a more sizable majority in the House of Rep. Now, if that changes and we see a gridlock, and, the Democratic Party loses its control over the House of Rep, and we have a divided U.S. Congress, with a Democratic president, historically, that's actually good news for the stock markets. Markets have actually done quite well, because we're not going to see anything dramatic coming out of the U.S. government, which leaves the Fed to do its job in fighting inflation and not worry about what the government might do next. Because if the government does anything too aggressive, either way, left or right, that complicates the picture for the Fed. But a gridlock is going to be good news for the markets. That's what the markets tell us historically.
I like investing playbooks because they give you something to work with in times of intense market volatility. You can just look at the script and execute. For clients who are looking at their portfolios, what changes now? What do they need to do?
Well, I think what we are telling clients is, do not be too negative. I mean, you have clients who are sitting on idle cash. They're very worried about the outlook of the markets. Some of them buy on dips, and then they see the markets go even lower. And they're worried. I mean, it's understandable. But we're telling them that the markets have come off sharply already, the bond markets and the equity markets. So as we discussed earlier, I mean, a lot of it has been priced in. I don't think the recession risk is fully priced in yet. We could see a bit more downside, but it's very hard to catch the bottom. So what we're telling clients is stay invested. Don't buy aggressively, though, but do buy gradually if you're looking to buy on dips, and take a medium-term view. The next 2 to 3 years could be a good time for equities when you buy at such levels. But in the short term, clearly there's going to be volatility. Take somebody with a medium-term horizon, risk appetite, who can see the blue skies. Right now, we're in the middle of a storm, and it's hard to see blue skies. But very often, that's when the best opportunities are.
Yeah, it's hard because the medium term seems like a world's way. Vasu, thank you for that. That's Vasu Menon with the longer term perspective. He's the Executive Director for Investment Strategy at OCBC Wealth Management. There's not much more to come on the show. This is Bloomberg.
How much of a push have you seen from the Kishida government in terms of green funding?
The Kishida administration has committed to doubling the amount of investments in so-called green technologies. I think we need more than just pronouncements. We need real money backing very innovative startups and innovative companies in this space.
What do you make of Kishida's new capitalism?
Well, I think his framework is reflective of the challenges that Japan society is facing, namely that growth has been present, but growth has not been, of course, evenly distributed. But frankly speaking, it's hard to redistribute income if you don't have much income to begin with. If the government and private sector can work together and collaborate to drive more innovative growth startups, that can really drive the income growth that the Kishida government needs to redistribute.
Let's get you a quick check of the latest business flash headlines. Bloomberg has learned that Credit Suisse has invited at least 20 banks into its $4 billion rights issue. Sources say Goldman Sachs, Citigroup, Wells Fargo, and JP Morgan are among those being courted to join the consortium. The bank's new CFO was said to have held due diligence with a group of bankers on Friday. Cathay Pacific will start using Russian airspace again, months after Moscow's war in Ukraine upended the aviation industry and global flight path. This makes Cathay the earliest of the major airlines to do so. The airline has attributed its decision to strong headwinds and payload issues affecting its flights from the east coast of North America. And Binance is forming a team to look at ways that blockchain and cryptocurrencies could help the social media platform. Binance is an investor in Elon Musk's takeover of Twitter. In a statement, the crypto exchange says on-chain solutions could help some of Twitter's issues, including the growth of bot accounts. And that's your Bloomberg Business Flash. There was a considerable amount of downside pain on the Egyptian pound, and that resumed on Sunday, hitting as low as 24, or as high as 24 against the US dollar for the first time. Speculation over where this is going to level out after Egypt declared a landmark shift to a more flexible exchange rate. So these are some of the numbers that are listed as the average client pricing on the Central Bank of Egypt website. You can see there we're just around 24 on the US dollar. Of course, this comes after some of the broader reforms that have been put into motion. It comes with a deal with some of the Gulf countries and a $3 billion loan arrangement with the IMF as well. I'm wondering how these higher wheat prices are going to filter through later on today. That's something to look out for. Let's get to some of the Gulf stocks, because broadly negative on Sunday trade. Dubai and Abu Dhabi still offline. They come back from the weekend later today. But Saudi Arabia seeing quite a bit of losses on the Sunday. Disappointing earnings, including from the heavyweight Saudi basic industries, which missed analyst estimates by a huge margin. That drove down the Dow by about 0.7%. A little bit of downside as well in Qatar versus Egypt and Israel. They're being able to counter that trend because globally, again, sentiment is negative. I'll take you to the caution that dominates the market action at the moment as we count down to the Fed decision this week. On the S&P 500 mini, we are down by about 1/5%. The thinking is that if the Fed signals any moderation beyond the 75 basis points in November as we get to year end, that could open a window for a more sustainable rebound through December 31. U.S. Treasury yields, we're still hovering around the 4% level for U.S. 10s. Much more ahead. This is Bloomberg.
Countdown in Europe from the financial centers of the world. Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is a market that over the past few weeks has made it clear it wants to go higher. Got a little spooked by the idea that geopolitical tensions are rising.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
I've
been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
This is Bloomberg Daybreak with our top stories this morning. A big week for central bank action ahead, with jumbo hikes expected from the Fed and the Bank of England, even in the face of mounting recession risks. Lula da Silva narrowly beats Jair Bolsonaro to make a stunning comeback as Brazilian president. However, Bolsonaro is yet to concede. Egypt's pound extends losses to depreciate as far as 24 to the US dollar for the first time. Speculation whirls over where the currency will level out. And in an exclusive interview, Qatar's energy minister slams European proposals to set limits on prices paid for natural gas as hypocritical.
Free market is always the best solution. And if you try to fix the market, you're going against all the anti-competition laws that the Europeans were trying to put on buyers, on sellers, and now they're doing it themselves.
So you're saying it's a bit hypocritical to a degree?
It's not a bit, it's a lot hypocritical.
Saad Al-Kabi there. Let's get back to the markets in Asia, though, for a minute with Annabelle Drulers in Hong Kong. Annabelle, what are you looking at?
Thanks, Yusef. Yeah, we've got a fairly risk-on session here today in Asia. It really does indicate to us just how much these markets are being led by what's happening on Wall Street, because at the end of last week, you had a lot of optimism around Apple, Caterpillar, and that helped lift the S&P 500, the NASDAQ, to weekly gains. So today in Asia, we do have these markets moving higher, even though Goldman Sachs says that Asian earnings for the third quarter have so far been mostly disappointing. In the currency space as well, you have the impact there of a stronger dollar. We are seeing investors buying up ahead of the Fed meeting later this week. So these are some of the currency moves they're watching, but mostly the weakness in the session is coming through in China. And if you change on now, we can take a look at how some of the major indexes are faring today as we head into the afternoon session, particularly watching what's happening in the MSCI China Index and also the Hang Seng H-Shares Index, given it is still up a little bit in the session this afternoon, but still down around its lowest, Yusef, since 2005. So a couple of factors into that. We have the PMI data that came in, both the services and manufacturing sector in contractionary territory. And then on top of that, you also have COVID cases there at around an 80-day high.
What about some of the data that emerged that tell a story of distress in China's property sector?
Yeah, Yusef, this was a big company story coming out early this morning. So essentially, the chairperson and founder of Longfor, which is the 10th biggest developer in China, she has stood down, and you can see here the market reaction today. That stock was down nearly 40% at one stage. This is a company, as I said, that one of the biggest developers in the country. It was also a move that was unexpected. So there are a lot of question marks around what this means and what it's telling us about the broader property sector as well. So we're seeing other developers also declining in the session in Hong Kong. But if you change on, it's also feeding across into the metal space as well, because these are some of the contracts here for metals that are listed in Shanghai on the Dalian exchange there. And so we are seeing losses there. Also probably a reflection of the PMI data as well, given that, as I said, it did fall into contractionary territory, so coming in at 49.2 versus 50.1. That was the prior reading, Yusef.
Thanks, Annabelle, for that. That's Annabelle Drulers there. Let's get to European proposals now to set limits on the price paid for natural gas. They are, quote, hypocritical. That's according to Qatar's energy minister. In an exclusive interview, Saad Al-Kabi slammed plans from the European Commission to limit prices using a dynamic mechanism, which could be in place as soon as this winter. He spoke to Simone Foxman in Doha.
If the winter this year is harsh, to be difficult to meet next year's demand. So it depends on weather. It depends on how much rationalization they're going to do. Or you see a lot of factories closing down, or there's a lot of switching also going on to coal and to other fuels. So how much of that happens will also dictate the result, if you will, or give you a different outcome. I hope that they're right and they have it for 2 winters, because starting 24 probably is when the solution will start coming in. But it's, in my view, it will take till 2025 to get a good resolution.
Some European buyers, you've been speaking to them. The one particular area of contention has been that they don't want to sign contracts that extend past 2030. Is that an area where you're willing to bend? Would you sign contracts that are perhaps less than 10 years long?
I think the issue is not the contract. It's really the price that I think countries or companies are willing to pay for security of supply. So if I'm selling into a liquid market, I have access today. I don't need to put a contract in place to sell it to that market, and I'll have a capability of diverting it depending. We're commercial entities, so if we sell into that market and find a better price elsewhere, we can go to that other destination. But if we're fixed to a certain destination where most companies would not, then there has to be a price premium for security of supply.
How big is that premium?
It depends on the market, and it depends how you're going to.
Okay, but Europe, perhaps Germany wanting to sign for 5 years. I'm not saying Germany. I know you don't like to talk specifics of contracts, but what's the scale?
Well, I don't see an issue with the duration. I think most countries or companies are talking about long-term duration or longer-term durations, 10 years or 15 years, and we're not stuck on a certain duration. But it's the flexibility that we would have in that contract is the issue. So we are talking to many buyers, and I think you'll see us sign some contracts in the near future.
You're quite critical of capping exports, capping prices even perhaps in the near term, as governments, as politicians around the world try and grapple with some of the problems they're seeing. What would you recommend instead of some of these considerations that they have?
I think striving to get peace in Europe would help drastically bring the price down, and that's no rocket science. I mean, it's very clear. But actually coming in as governments and putting caps on prices, it does many things. First, it ruins the market. Second, if I'm an investor in oil and gas and I'm trying to take a final investment decision on a gas project or an oil project, and I look at the market and I look at the European Union and a big buyer, if you will, of whatever product I'm selling, and they dictate a certain price and say, I'm not going to buy oil above $50, let's assume. That would basically say that if I go today and I invest $10 billion, thinking that my rate of return is 9% or 10% based on $50 crude price, if the next government doesn't like the price and they make the price cap $30, what do I do? Right. Okay, so you're going to scare away investment by putting in price caps. Free market is always the best solution. And if you try to fix the market, you're going against all the anti-competition laws that the Europeans were trying to put on sellers, and now they're doing it themselves.
So you're saying it's a bit hypocritical to a degree?
It's not a bit, it's a lot hypocritical.
Do you think Asia is better prepared to tackle a tight energy market? particularly a tight natural gas market for the next couple of years than Europe is, perhaps?
No, I think Asia is actually in a tougher position. Some of the advanced Asian countries that don't have a lot of conversion to different fuels will have a more difficult time if they don't secure. But some countries that go much more on coal and fuel oils may be able to withstand less gas in the future.
A couple months ago, you promised not to divert cargoes of LNG that were headed to Europe that you could potentially divert to Asia. Now, that was a pretty easy thing to say, I think, when you said it, because the prices for spot going to Europe were much higher than what they were in Asia. Is that going to be as easy to say to some of your biggest clients when you're saying, oh, no, we're keeping our supply going to Europe?
No, you see, when we said it, it wasn't about a price issue. It was in the beginning before we even knew what the ramifications would be and what the prices would do. And the prices weren't as high as they became later. So if you look at when we actually announced it, was much earlier than the prices. I understand what you're saying, but it's difficult to judge what's going to happen and how long we'll remain with that, because it can be an infinite thing where we can divert. But for now, we're not diverting.
We're heading into COP27 in just a couple of days. As one of the world's largest LNG exporters, what does Qatar want to see come out of this set of meetings?
I think the realization, like many European countries, that gas is part of the solution and that gas is needed for sustainable development around the world. So for you to have basically a supply source that is a baseload for you when the wind does not blow, when the sun does not shine, and when it's coupled with carbon sequestration, the best equipment the money can buy from an emissions point of view. It's coupled with some renewable to power it. It also has methane abatement built in. When it has all these characteristics, like what we have in Qatar, as the North, East, and South is the lowest carbon intensive LNG project on Earth ever built, then I think it has to be part of the solution. And gas in this form is a destination fuel and not a transition fuel. But for you to achieve the transition that you want, you have to replace coal, you have to replace some of the liquid fuels, and that the only way to do it is with gas.
Let's continue the energy conversation now and get back out to the ADIPEC conference in Abu Dhabi. My colleague Manis Grani standing by with a guest. Manis.
Yusuf, thank you very much. Yeah, guest one of the season for 2022 for ADIPEC. It's the NE CEO, Paddy Viscoelastic. Great to see you. It's been a long time. Long time, but you missed me.
I miss you a lot.
I know. Listen, gas prices have tanked by 65% since the highs at the height of the war. We're down 40% in the November contract. Does that say we've passed the worst, or is that just a temporary sticking plaster on the European energy crisis?
I think that it's a temporary situation. Why? Because we were able, at least in Europe, generally speaking, to fill our storage. So with all the storage now ready to face the winter time, the price can come down. Clearly, we have problem in 2023 because in 2023 we don't have Russian gas. You can consider in 2022 we had for 6 months 80% of the Russian gas done, then 50%, now about 10%. So that helped to fill the storage and be in a good position for the winter time.
But then what about 2023? I mean, we have the fundamental gap with a fundamental security crisis, or how would you describe it for 2023?
2023, I can't talk for Italy,
yes.
Not for, because in Europe we have a different kind of energy mix. Each country has a different kind of energy mix, coal, nuclear, wind in the north. So what I can say that we try to compensate, and I think that for this year we are able to compensate, so 2022, 2023, 50% of the Russian gas. Next year we can compensate 80%, but we need regasification capacity because we have to compensate what we lost through the pipes from the north. We have to compensate with regasification capacity. That is true for us, for Germany, for Holland. So floating regasification plant are essential because we have LNG. In our case, mainly from Egypt, from Africa. That is the point. And we increase drastically the contribution from pipe from Algeria, for example.
When you say drastically, I mean from North Africa.
From Algeria, we double. We are going to double the production. So now Algeria is practically contributing like Gazprom in terms of capacity to our Italy, but from the south. And we have infrastructure bottleneck from the south to the north, because normally the flow is from the north to the south. So we have to increase the capacity of infrastructure, increase the capacity of regasification, and clearly volumes.
Where is Meloni? She's a new prime minister in Italy. Have you engaged with her? How high up is energy security on her agenda?
Top priority.
What's she going to do for you as a CEO to make that happen and come true?
What I have to do.
What's she going to do for you?
Clearly, I think that the main responsibility for importing gas from outside Italy is my responsibility. It's not the Prime Minister's responsibility. But I think that is going, is following what Draghi did with the support, back to our actions.
We just heard from the Qatari oil minister. He says price caps are hypocritical by the Europeans. The price cap is coming. What is the impact of the price cap that's to come in Europe? Do you think it'll have a negative impact?
Brad Locamp. I'm a contractor at the National.
That in Europe we are
the foundation
of a cap on the gas price, and so it's not something that we are sure that is going to happen, because it's a big discussion, as you know. Some countries like Germany,
to remove the small bit.
But if I have to describe,
and then finally we masked the image, leaving just the head that we targeted. So earlier I talked about the importance of physical space and how the orientation is rendered. So here we have two images, the visible human head along with the MRI head. These are actually acquired with different fast axes in different directions. And here we resampled the two on top of each other with the identity transform. Because we have the metadata, then the visible human work is just 10% of the pixel values. Euler transform followed by. Now we can use registration to correctly align the MRI head and the RGB visible human head. Here is a snippet of a part of the code.
This is Subway. 新鲜现做，你的独特风味。
牙龈问题让我睡不好，工作不顺。牙周式深入口腔死角，60秒内扫除超过50%牙菌斑，牙龈照顾好，生活没烦恼。
Hi everyone, welcome to tutorial 41 of our introductory Python for image processing tutorial series. Now in this tutorial, let's actually build on the content that we learned in the previous one. In the previous tutorial, I talked about Fourier transform, and now let's actually create an image filter using the Fourier transformed signal of our input image. Now, just to give you a quick reminder, again, Fourier transform is you're converting a signal from one domain to a different domain, from time domain in this example to a frequency domain. So same thing with an image. You have an image, you convert them into a frequency domain. And why do we need to do that? Again, let me skip through these just to show you the final example. The advantage of doing that is instead of doing convolutional based filtering, where you multiply these pixel values with a pixels have value of 1, all blocked, and as you can see, I don't know if you can tell, but this is a small. I am
Or if h happens to be very small, right here, because the motion blur kernel itself has very low power for that high frequency, then once again, this
the capability to attract this gas, and but we count we can count down to speculation.
Well, speculation, you did very well in gas trading in the past 9 months, $2 billion. We haven't got time for that, but I do want to talk about a tight oil market, up 11% in the past month. How tight is this market? How high can oil go into the winter?
I think that there is a mixed situation for oil market, because for sure there is no new project, so the production is going down because it's not easy to invest with an horizon that is not clear. Because from a policy point of view, policymakers are against the long term, so investors are, especially in Europe, are not really keen to invest a lot. Now, from the other side, the stock in the OECD countries are very low, less than the average of the last 5 years. So the stock
very tight market.
Very tight market. But from the other side, we have lockdown in China. And from the other side, we have, by the 5th of December, we stop buying crude from Russia. So it's at least 2 million barrels of oil disappear from the market for our side. So there is a mixed situation. A possible recession with a lower demand, but from the other side, a market that is very tight and not big new investment, except in this country.
So what does that do to prices? The recession is the cap, the supply is the risk to the bid.
There are forces that are fighting against each other. I think that OPEC demonstrated that they want to keep it in a range of between $90 and $100 per barrel.
Where do you think it'll go in the next 3 months? Because we're coming to the clip. This is your last moment to make your call on Bloomberg for the back quarter.
I think that the price will remain around $90 per barrel. At least that there is no strong recession, and that can go down the demand.
Through 2023?
Yeah.
Claudia Descalzi, at least I got a price out of you at the end. Now we know a little bit more about how price caps work, the CFDs. I knew that knowledge would come in handy one day.
Thank you.
Claudia, good to see you this morning. Our first guest of ADIPEC 2022, Yusuf, got a price of oil out of him. He looks very chilled. He's weathered the pandemic better than me. Yusuf.
I love it. Everybody knows how hard it is to get a conviction view on oil from Claudia Descalzi. Manus made it happen. Thank you for that. Manus currently at the ADIPEC Energy event in Abu Dhabi. He'll be, of course, coming through with coverage throughout the morning. So much more to come on the show. This is Bloomberg.
Everything you need to get set for the start of U.S. trading. Bloomberg The Open with Jonathan Farrell. Drilling down on the numbers and preparing you as only Bloomberg can. Weekdays on Bloomberg.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
The Fed is confronted with Fed fog. Okay, I mean, again, I keep asking people, when was the last time we admired a step taken by the Fed that we thought, wow, yeah, that really has helped my life? Why is the default position to crash the economy?
The eclectic asset management founder, Hugh Hendry, they're voicing his doubts about Fed policy ahead of this week's rate decision. Our M Life Pulse survey found that just over half of equity investors intend to stay flat in the run-up to the FOMC. The other half is fairly evenly split between those intending to buy and those planning to sell stocks. Today's Bloomberg Intelligence Chief Equity Strategist Gina Martin-Adams joins us around the set. Stop by in Dubai for a change. I'm very thrilled about that. I was looking through your note from over the weekend, basically a question of, well, are we going to get a Fed pause, and how critical is it for a year-end rally to materialize?
Yeah, I think it's been the case for stocks for the last several weeks has actually been about the Fed pause. So it's fairly critical that we get some sign from the Fed that they will be entering a pause phase at some point in the next several months. When we look at what's actually driven the equity market, many people attribute the equity market gains of the last few weeks to earnings season, because stocks do tend to do pretty well during earnings seasons. However, when you actually look at the numbers, the estimates continue to fall fairly rapidly for the next several quarters. Companies are generally beating current quarter expectations, but at a lower rate than is the norm. So what you've actually seen is valuation expansion has driven the entirety of the equity market advance since its lows back in early October. The result of that is you have to assume that the equity market advance is really about interest rates and the outlook for interest rates. So what the Fed does this week is absolutely critical to sort of solidifying the gains that we've had.
I want to pick up on what you were talking about in terms of valuations, because for some of the big tech names, they've been stratospheric, right? 40 times forward earnings. Now that's kind of come back a little bit. But that process of sort of maturity isn't necessarily enough, is it, at this point?
Yeah, it's not enough. And we've talked about mega cap securities, the biggest 5 stocks in the S&P 500, as a persistent problem for the S&P all year because valuations are still enormously high relative to the rest of the market. When you look at the market excluding these 5 names, you're looking at a market that's trading at 14.5, 15 times forward earnings. It's below long-term average multiples. When you include the mega caps, you have a market trading above 17 times earnings. This group in and of itself is trading at a 50% premium to the rest of the market. So very clearly there is a concentration of holdings. Investors generally over-invested in this small segment of the index is resulting in this valuation premium. At the same time, these are the stocks that are really starting to mark down forecasts. We saw over the course of the last week, most of these mega cap stocks made earnings announcements. Many of them beat, again, their quarter expectations, but only by a small margin. And every one of them said to us that the outlook is not looking as positive. So with premium valuations and an outlook deteriorating, it's really difficult to justify sort of an over-investment in this group.
A reality check there from Gina Martin Adams, the Bloomberg Intelligence Chief Equity Strategist. We've still got much more to come. This is Bloomberg.
The difference between missed opportunity and actionable intelligence. For in-house attorneys who strive to provide superior counsel and strategic advice, Bloomberg Law offers an unmatched platform of analytics tools and business intelligence. All to help improve productivity, mitigate risk, and inform decision-making. For the comprehensive platform that helps you work smarter and faster, the difference is Bloomberg Law.
We're just hearing from Gina Martin Adams there about a potential Fed pause and how important that is for a year-end rally. Well, bond traders and investors are going to be very cautious going into the FOMC deliberations in case it comes out more hawkish than expected. So U.S. 10 still holding steady at 4.02% after 12 weeks of losses. This is the kind of tone we're starting off with. The other big move I'm looking at is in the commodity space. It's not crude oil. It's not gold. It's not wheat. It's actually natural gas once again. U.S. natural gas futures coming out of the gates up about 5.75% as flows to LNG export facilities rose to the highest level in the month. Now, what happens as a result of that? Well, it tightens domestic supply, and that's why you're seeing that aggressive repricing. The lower than normal temperatures that are being seen for the western parts of the United States is also bullish for this particular trade. From there, let's get to equity futures in the United States. Where are we set as we think about the FOMC, as we think about positioning on the S&P 500 mini? We're called lower by about 1/5 of 1%. It's a bit of a contrasting view in Asian stocks this morning that are playing a bit of catch-up with the late Friday trade in the United States. Tech, a little bit more pain as it stands on the NASDAQ futures. And then from there, I take you to the oil markets. Added coverage throughout the next few hours, of course, with big interviews. The center of the story around demand, around supply. Currently, though, a little bit lower for Brent, about 0.8 of 1%. This is Bloomberg.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Why do the biggest names in business choose Bloomberg?
That is a great question.
Great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Confluent dollar oil 2022. There's the geopolitical angst between Russia and the United States of America. Supply risk that OPEC may do another cut. OPEC plus, of course, there's a gathering here of Saudi, UAE, Nigeria, a number of the countries in OPEC. And then combined into that, the debating the risk about a global recession and the slowdown. And that juxtaposition between China coming back online and recession risk along with a tight market is exactly what Viscoelastic referred to in our conversation, Yusuf. So a great deal of consideration here. We'll see what ABS, Prince Abdulaziz bin Salman has got to say later in the day. As Javier Blas's piece put it, it's all about Saudi first. Yusuf.
The Monday morning narrative there featuring Energy Manus. Thank you for the moment. That's Manus Cranny there. And beyond energy, of course, the story is as well about the Fed. We're seeing a lot of positioning ahead of the FOMC decision, and it is broadly a bit of risk aversion at a minimum as we look at S&P 500 mini futures. There's a lot to consider going into this. If the Fed can signal that they can go 75 and then slow down, the market's going to be comforted by that. That's the way folks at TD Securities are speculating this might go down. And then U.S. 10-year yields at 4.0288. I want to get to this chart here, GTV Go for our clients, because U.S. 10-year yields were down after a very long 12-week rally. It's the longest since 1984. Bond traders are going to be wary about the Fed going into this. If they come out more hawkish than currently anticipated, the Markets Live team, they've done their survey, and it showed that 47% of respondents are actually, they're not long or short. They're on the sidelines ahead of the Fed decision. And from there, I take you to the big mover as well in commodities, and that is wheat. We are seeing the consequences of Russia pulling out of an important deal to export grain through the Black Sea out of the Ukraine, and that deal has been seen critical for easing tight world supplies. As a result, wheat intraday up as much as 7.7%. It's the latest setback that could add to the anxiety around global food inflation. From there, I take you to a bit of a preview on some of the other interviews that are coming up this hour. The chairman of the Saudi National Bank is going to join us to talk about the latest acquisition or the latest purchase of 9.9% of a stake in Credit Suisse, about the longer-term vision that he has for this cooperation and coordination at the minimum. Let's get to the markets in Asia as well, see what kind of deals are being struck there. Annabelle Drewlers has those. Annabelle?
Thanks, Youssef, for that. Yeah, we're heading into the afternoon session here this Monday, and we're looking fairly risk on here. You can see those moves being reflected in the Nikkei 225, rising 1.6%, taking its cues, of course, from that optimism around earnings on Wall Street. But the other factor that we're watching today is what's happening in China. These markets still have been under pressure during the morning session, but we're back into the afternoon now for the CSI 300 and also the markets here in Hong Kong, really being affected by factors including weaker PMI readings, both the services and manufacturing gauge in contractionary territory. COVID cases are also at around an 80-day high, and you'll get more on that in just a moment. But just focusing more into the size and the scope of these moves, particularly for the Hang Seng H-Shares Index. If you pull up the terminal chart, because earlier today we actually dropped below that key 5,000 level. We have seen that index now at its lowest since around 2005. So even though we are fractionally higher heading into the afternoon, Youssef, there's still a lot of skepticism around these markets.
Annabelle, thank you for that. That's Annabelle Drewlers there with a bit of an overview of the action in Asia. Let's get to the strict COVID measures in China, because they may be about to hit Apple's tightly managed supply chain. Video shows workers leaving the world's biggest iPhone plant run by Foxconn after snap COVID measures left as many as 200,000 staff facing inadequate living conditions. Let's bring in our Asia Global Business Managing Editor, Emma O'Brien. Emma, there was a bit of a feeling that progress was being made. This is not progress.
Yeah, I mean, I don't think we've seen really a reduction in the prosecution of COVID-0 in China since the Shanghai lockdown earlier this year. They've just become a lot more stealthy and quiet about the way that they go about it. But at the moment, you've got lockdowns effectively in half a dozen major cities in China, including Guangzhou, which is home to the world's biggest iPhone factory, as you just mentioned. We understand there is an outbreak within the factory, that they've been isolating people and put the entire plant, which has some 200,000 workers, it's a real campus there, into what's called a closed loop, where workers are only able to go to and from their dorms and the production lines. And there's been quite a few issues around food, which is sort of what has sparked this and what is seeing people leave the factory there. Concerns about what sort of food people in isolation are getting, as well as those that are on the factory floor.
Emma, what's it going to take for a bit of a shift in the calculus of the government of China, the very top echelons?
I think it's going to take time initially. I think you're not going to see any sort of meaningful easing, particularly on the internal domestic restrictions like lockdowns, mass testing, restrictions on travel between provinces until after winter, so into next year. With the current vaccination levels that they have, particularly among the elderly, which are very low, particularly when you go above 80 years of age, you're not going to risk opening up into an environment, a cold environment where people are getting together more quickly. That would lead to a lot of death, which is a real sort of sticking point for Beijing and for President Xi Jinping's government. So you're not going to see any real meaningful movement on these disruptive measures internally like lockdowns until next year. The consensus among the experts we spoke to a raft of them, economists, market watchers, scientists, is they're watching the National People's Congress in March next year, which is when we get confirmation on the new leadership and who's going to be doing what. That could potentially be a point where China's signals are moving away, but they do need to move more significantly on vaccination and on building stockpiles of COVID antivirals.
Emma, hugely valuable analysis, much appreciated. That is Emma O'Brien. Let's get to Brazil now, because Lula da Silva has won the election as the country's president in a dramatic comeback for the left-wing politician who was languishing in a jail cell just 3 years ago on corruption charges. For more, we're now joined by Clara Ferreira Marquez. So how did the sequencing come through then in terms of him being able to get it across the line?
So it's a historic win in many ways. It's the first time that we've seen an incumbent president losing. This is, I think, something like the 14th incumbent to be unseated in Latin America. It is also a return, an unprecedented return. So Lula will be coming back for a third term. But it's a very, very narrow win. It's only less than 2 percentage points between them. Really a very divided country between a pro-Lula North and a pro-Bolsonaro South. Lula hasn't given a lot of details about his economic plans. We do know from the past that he's pretty pragmatic. But we will see some oscillation in markets this morning, probably in the currency, also in stocks, while we wait to get a little bit more clarity and certainly the appointment of the finance minister.
Well, Lula da Silva is 77 years old. I just found that out. Kind of gives me a little bit of hope in terms of later life ambitions. Clara, thank you for that. That's Clara Ferreira Marquez there. Let's run you through the first world headlines from around the world and get out to Simone Foxman. Doha, Simone.
South Korea's president has given a TV address promising a review of safety measures after Saturday's crowd crush in Seoul that killed at least 153 people. The tragedy happened in a narrow alley as tens of thousands of people celebrated Halloween, the first such festivity since COVID restrictions were lifted last month. Yonhap News says 97 of those killed were women and 20 were foreigners. Meanwhile, a bridge has collapsed in the western Indian state of Gujarat, killing at least 60 people and leaving several others injured. Local news reports say hundreds of people were on the suspension bridge when it gave way, with many still missing. No immediate cause has been given for the collapse, but the colonial-era bridge just reopened after renovations. President Biden has blamed political rhetoric for the attack on House Speaker Nancy Pelosi's husband. Biden says this includes denial of the 2020 election result. An intruder hit Pelosi's husband with a hammer early Friday inside the couple's home in San Francisco. The attack has put U.S. lawmakers on edge, with midterm elections less than 2 weeks away. Macau residents have been ordered to do 3 days of rapid COVID tests from Sunday after 3 new cases were found. The cases are dampening hopes the gambling hub could soon allow tourists back from mainland China. Officials locked down the MGM Cotai Resort after a worker there tested positive along with her 2 sons. That was following a visit to the mainland. Staff and guests are being put in quarantine. And Bloomberg's been told that Elon Musk is preparing a round of layoffs at Twitter days after taking ownership of the social media platform. A source tells us the billionaire asked managers to list key members who could be let go. Separately, Axios is reporting that Musk plans to cut up to 30% of staff in some departments, with product and engineering management set to be severely trimmed. Global news, 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Simone Foxman. This is Bloomberg. Yusuf.
Thank you, Simone. Let's get you a bit of a preview of what else is to come on the show. Qatar slams European proposals to set limits on the price paid for natural gas as, quote, hypocritical. Hear our exclusive interview with the nation's energy minister later this hour. But next, we talk global markets as the Fed and the Bank of England prepare for what most think will be 75 basis point worth of hikes this week. As First Abu Dhabi Bank chief economist Simon Ballard joins us. This is Bloomberg.
So let's go inside the boardroom. Let's suppose you win a proxy fight and or you just get invited onto the board. You go to your first board meeting and you're the person who's saying you can fix this company. All of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I want you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside of that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we present them with a plan.
From the world politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Right now, all central banks are playing tough and talking tough.
Investors are obviously skittish as the Fed pulls away the punch bowl of easy money, and that's going to lead to a lot of mispricing and uncertainty.
We're not only in fiscal dominance in this game of chicken between Treasury and central bank, we're in what the folks at the Bank of International Settlement call a debt trap.
It's really a Fed-driven downturn that we're seeing, and it's going to take the Fed to correct it.
Maybe the Fed could signal a move towards a smaller increments of rate hikes next week after they meet.
The labor market is still strong, but it requires a Fed that has a lot more skill and a lot more luck.
That means you need to see higher unemployment. And if that's the goal, they are failing miserably.
I think the bond vigilantes are back.
TV guests with their thoughts on the Fed ahead of this week's rate decision. Economists surveyed by Bloomberg expect officials will maintain their hawkish stance, laying the groundwork for interest rates to reach 5% by March 2023. We also have the Bank of England on Thursday, where a 75 basis point hike is expected. Joining us now is the first Abu Dhabi Bank chief economist, Simon Bowler. Simon, I appreciate the logic of a Fed that moderates its tone at this week's FOMC, but again, this is a market that if you give it an inch, it will take a mile.
It'll take a mile, absolutely. No, and I agree, absolutely. I mean, the fact is that the Fed has conditioned us for 75 basis points this week. We've got the same from the Bank of England coming later in the week. But I think what we need from the Fed is for them to sound not more dovish, but more conditioned, more nuanced, more data dependent, be cognizant of the risks that they are sort of engendering through this sort of pursuant tighter monetary policy strategy. So they're going to continue to push, but they have to be increasingly aware of the impact of that. At the end of the day, they want a recession. They realize that inflation is not demand driven; it's supply shock driven. The only way they're going to bring inflation down is through a recession. So that is their goal. Let's not lose sight of that. And they will continue to push until they've got that. But at the same time, they don't want to be blamed for triggering that recession. So they want it, but they don't want it to be their fault.
There's a note that's hovering around from Goldman Sachs, and basically they make the point that they see rates going up to 5% by March, which is more than what they had previously projected. The Markets Live team is asking the bigger question around whether the current market, in terms of risk assets, whether they've already priced for 5% rates from the Fed.
They probably haven't. I mean, the market is pricing in this expectation that we're going to continue to push through until the end of this year, and then perhaps alter the narrative or tweak the narrative, if you wish, as we go into early 2023 and become a little bit more data dependent, a little bit more nuanced. If the Fed continues to push, then perhaps risk assets aren't, and there's some significant sort of reassessment risks and downside risks to be brought into the equation.
I'm also looking at the midterms just days away, and political risk that is emerging. Larry Summers, the former Treasury Secretary, weighed in on this. Here's what he had to say.
Frankly, the Fed doesn't listen, and if anything, feels more pressure to prove its independence. So they don't influence short-term rates and what the Fed actually does, but they do raise questions in the mind of market participants, and they raise long-term rates.
Simon, agree or disagree? Short-term, no impact. Long-term, there could actually be an impact.
Well, they are definitely trying to target long-term rates in terms of bringing down or re-steepening the curve from the sharply inverted nature that it's got now. So, the market will drive short-term rates. The Fed will continue to drive or try to drive long-term rates, and that long-term expectation of sustainable growth and managing to avoid a deep and protracted recession. Excuse me.
What about the political risk in the U.S. with the midterms? How do you factor that in?
Well, we suggested that perhaps they'd step back a little bit around the midterm selection, around the midterm pricing. They don't want to be seen as acting too politically, but at the same time, the Fed's on such a tear in terms of the recent tightening or the current tightening that it's in. I don't think politics really come into it. The Fed's on a predetermined course and fairly blinkered in terms of how it's dealing with rates for the time being.
Where does that leave the Bank of England? I know you follow the UK story very closely at First Abu Dhabi Bank. What is the communication to clients as we start this week?
Well, 75 basis points from the BOE on Thursday. They'll be the biggest single rate rise in 33 years we've had from the UK Central Bank at a time when we've got intense cost of living crisis. We've got a significant risk on the mortgage front. And I think while cables come back from the 103 drop that we saw post Mrs. Truss's mini budget, we're back to sort of 116 this morning. I think the risk is very much still to the downside for the UK macro story and for cable as we push forward. If we get 75 basis points, it could be the camel that breaks the straw that breaks the camel's back and sees a significant sort of or meaningful pickup in personal default rates on the mortgage front. That'll hit consumption, it'll hit growth. So the BOE, while it's continuing to chase this interest rate insensitive inflation, is running a significant risk of damaging the economy over the longer term.
Well, in this market, anything's possible, even a camel breaking a straw's back. Just in terms of the data that we got out of China, the PMI, because that's important, and I know your team is dissecting the data as we speak. What is the top line read, then, in terms of implications for the global economy, way outside of China borders?
Well, again, we have to be more cognizant of the underlying data that we're driving through tighter monetary conditions, and clearly, all three of the PMI readings in China reflecting the constraints of the zero COVID or the COVID zero strategy, which was reinforced last week as Xi Jinping was sort of in for the third term. And I think it definitely speaks to that slower global growth environment as we push forward into more restrictive monetary policy territory over the coming months.
Simon, great catching up. Thanks for making the time. That's Simon Bowler, Chief Economist at First Abu Dhabi Bank. We still have much more to come on Bloomberg Daybreak Middle East. This is Bloomberg.
Imagine simply climbing a cable into space. The concept is known as the space elevator. Not only could it significantly change how we leave planet Earth, but it could also completely transform humanity's relationship with space. And there are scientists who think we could have already built it.
We have the material, we have the technology, we have the lasers, we have the climbers, we have all of it. If a private entity wants to build it, or a government, they can build it. It'll change society. We have no clue how colonizing into space, how really spreading out into space will really change our society over the next 50 to 200 years. It'll be completely different.
Welcome to the world of decentralized finance. Bloomberg's covering all things crypto, the people, the transactions, and the technology. Bloomberg Crypto, Tuesdays.
You just saw a cabo of the Bank of England chief and the jokers at the IMF, forgive me, but ousting the British Prime Minister for having the audacity to suggest a fiscal expansion in a depression. UK prices, the UK stock index is below where it was when we entered this new century, right? It's not growing. And what is the answer? To raise interest rates? I mean, what planet are these people on?
As the name
index is below where it was when we entered this new century, right? It's not growing. And what is the answer? To raise interest rates? I mean, what planet are these people on?
As the name implies, the Eclectica Asset Management founder Hugh Hendry there with some strong views, to say the least, on the situation in the UK. Let's get you to the latest Business Flash headlines. The other stories we're watching. Bloomberg has learned that Credit Suisse has invited at least 20 banks into its $4 billion rights issue. Sources say Goldman Sachs, Citigroup, Wells Fargo, and JP Morgan are among those being courted to join the consortium. The bank's new CFO was said to have held a due diligence with a group of bankers on Friday. Cathay Pacific will start using Russian airspace again months after Moscow's war in Ukraine upended the aviation industry and global flight paths. This makes Cathay the earliest of the major airlines to do so. The airline has attributed its decision to strong headwinds and payload issues affecting its flights from the east coast of North America. And Binance is forming a team to look at ways that blockchain and cryptocurrencies could help the social media platform. Binance is an investor in Elon Musk's takeover of Twitter. In a statement, the crypto exchange says that on-chain solutions could help some of Twitter's issues, including the growth of bot accounts. And that is your Bloomberg Business Flash. I want to get to a mover in this part of the world, and that is the Egyptian pound, which is weakened again after the dramatic weakening we already saw at the end of last week. So extending losses to as far as 24 to the US dollar for the first time. Speculation world of where the currency is going to level out after they declared this landmark shift to what they say, and they've said it before, a more flexible exchange rate. So they've also had this $3 billion loan agreement with the IMF and the deal with some of the Gulf countries for investment. And collectively, Egypt hopes that it can reset expectations and bring in more foreign capital and stabilize an economy that is hurting. And it's hurting hard, especially after the spike in wheat prices as well, that is yet to be factored into the next 3 months. I want to take you to the Gulf equity markets. I'm looking here at a bit of a mixed picture. Dubai and Abu Dhabi were not trading. They were still on weekend, but the Saudi Tadal was down 0.7%. We had a big miss in earnings season from the heavyweight Saudi basic industry. SABIC missed the average analyst estimate, and so that drove the Tadal lower. So a little bit of upside, a bit of a reprieve in the Egyptian stock exchange and in Tel Aviv stocks as well. Let's get you a bit of a snapshot of what else is in this market, including a bit of a view here on equity futures on the S&P 500 mini. Again, that caution still very much in play as we count down to the FOMC decision later in the week. That's also the case for the bond markets, where we're seeing U.S. 10-year yields holding steady, kind of where we left off late Friday. The coverage continues. This is Bloomberg.
Innovation, money, and power collide in Silicon Valley and beyond. Bloomberg Technology with Emily Chang. Weekdays at 5 p.m. in New York and 2 p.m. in San Francisco. Why do the biggest names in business choose Bloomberg?
That is a great question.
Great question. Great question. Great question. Best question I get all night.
Bloomberg. Top experts. Great questions. No one covers the world like Bloomberg.
Because Trustonomics is being dismantled, MPs behind the scenes are asking, what's the point of having her at the top?
Can the strong dollar amplify the world's risks of instability?
Xi Jinping's complete reunification must be realized.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
This is Bloomberg Daybreak Middle East. Our top stories this morning. A big week of central bank action ahead, with jumbo hikes expected from the Fed and the BOE, even in the face of mounting recession risks. Lula da Silva narrowly beats Jair Bolsonaro to make a stunning comeback as Brazilian president. However, Bolsonaro is yet to concede. Egypt's pound extends losses to depreciate as far as 24 to the US dollar for the first time. Speculation whirls over where the currency will level out. And in an exclusive interview, Qatar's energy minister slams European proposals to set limits on the price for natural gas as hypocritical.
Free market is always the best solution, and if you try to fix the market, you're going against all the anti-competition laws that the Europeans were trying to put on buyers, on sellers, and now they're doing it themselves.
So you're saying it's a bit hypocritical to a degree?
It's not a bit, it's a lot hypocritical.
Let's check in on the markets in Asia. Annabelle Drulos joins us again from Hong Kong. Annabelle, how's the session evolved in the last 25 minutes?
Thanks, Yusuf. Yeah, just taking a look at what's happening in the equity space this afternoon, because that's where it's most interesting for us today. We are seeing the likes of Hong Kong, Thailand, Taiwan, and most of them really moving high today, down to this optimism around earnings that came through in the US with Caterpillar and Apple, the two big bellwethers there that really helped investors overcome any fears around the inflation and the Fed rate hiking path. But one index is standing out in particular as we head into the afternoon sessions of the CSI 300, half an hour back from the lunch break, and we can see it there, down 0.5%, and also watching what's happening in the yuan as well, because both of these assets are really reflecting concerns here around the underlying picture for China's economy. If you change on now, we can take a look at that in more detail, what's really driving sentiment today. So firstly, there are the PMI readings. So we have the services and the manufacturing gauge both falling into contractionary territory, really down to what's happening with COVID-0 and this insistence on these policies, even as we see cases at their highest since early August, and that we see the virus now spreading in about 2/3 of provinces in China at a faster pace. And then also you have the shock exit of the chairperson of Longfor. That is one of the biggest developers in China. We can see the reaction there for that stock down around 20% currently, Yusuf.
I'm looking at some of the analyst calls around the earnings season thus far. I mean, there are a few surprises in it, to say the least.
Yeah, well, what's interesting, Yusuf, is that investors in Asia today, at least in the equities picture, are really more focused on Wall Street. But when you take a look at what's happening in Asia, well, Goldman Sachs has a note out saying that so far, really, the results have been quite disappointing. If you look at the MSCI Asia Pacific ex-Japan index, we've had nearly 450 companies giving their results thus far. And what Goldman Sachs is saying is actually earnings have been down about 4% when you look at it on a yearly basis, and then 16% drop on the quarter here. Now, what they're saying is that the markets that are below their historical averages, they're focusing on Thailand, India, and then China in particular. If you change on now, we can also take a look at those results so far from China, because nearly 90% of companies on the MSCI China index have reported their earnings. And you can see here the vast majority of them have been either a negative surprise or just meeting estimates there, Yusuf. So certainly a lot of challenges facing the mainland economy.
Yeah, absolutely. No shortage of challenges. Thank you very much for that, Annabelle Drulos. Let's get to European proposals now to set limits on the price paid for natural gas. They are, quote, hypocritical. That's according to Qatar's energy minister. In an exclusive interview, Saad Al-Khawi slammed plans for the European Commission to limit prices using a dynamic mechanism, which could be in place as soon as this winter. He spoke to Simone Foxman in Doha.
If the winter this year is harsh, it will be difficult to meet next year's demand. So it depends on weather. It depends on how much rationalization they're going to do. Or you see a lot of factories closing down, or there's a lot of switching also going on to coal and to other fuels. So how much of that happens will also dictate the result, if you will, or give you a different outcome. I hope that they're right and they have it for 2 winters, because starting 24 probably is when the solution will start coming in. But it's, in my view, it will take till 2025 to get a good resolution.
Some European buyers, you've been speaking to them. One particular area of contention has been that they don't want to sign contracts that extend past 2030. Is that an area where you're willing to bend? Would you sign contracts that are perhaps less than 10 years long?
I think the issue is not the contract, it's really the price that I think countries or companies are willing to pay for security of supply. So if I'm selling into a liquid market, I have access today, I don't need to put a contract in place to sell it to that market, and I'll have a capability of diverting it depending, we're commercial entities, so if we sell into that market and find a better price elsewhere, we can go to that other destination. But if we're fixed to a certain destination where most companies would not, then there has to be a price premium for security of supply.
How big is that premium?
It depends on the market, and it depends how you're going to.
Okay, but Europe, perhaps Germany wanting to sign for 5 years. I'm not saying Germany. I know you don't like to talk specifics of contracts, but what's the scale?
Well, I don't see an issue with the duration. I think most countries or companies are talking about long-term duration or longer-term durations, 10 years or 15 years, and we're not stuck on a certain duration. But it's the flexibility that we would have in that contract is the issue. So we are talking to many buyers, and I think you'll see us sign some contracts in the near future.
You're quite critical of capping exports, capping prices even perhaps in the near term, as governments, as politicians around the world try and grapple with some of the problems they're seeing. What would you recommend instead of some of these considerations that they have?
I think striving to get peace in Europe would help drastically bring the price down, and that's no rocket science. I mean, it's very clear. But actually coming in as governments and putting caps on prices, it does many things. First, it ruins the market. Second, if I'm an investor in oil and gas and I'm trying to take a final investment decision on a gas project or an oil project, and I look at the market and I look at the European Union and a big buyer, if you will, of whatever product I'm selling, and they dictate a price, a certain price, and say, I'm not going to buy oil above $50, let's assume. That would basically say that if I go today and I invest $10 billion, thinking that my rate of return is 9% or 10% based on $50 crude price, If the next government doesn't like the price and they make the price cap $30, what do I do?
Right.
Okay, so you're going to scare away investment by putting in price caps. Free market is always the best solution, and if you try to fix the market, you're going against all the anti-competition laws that the Europeans were trying to put on buyers, on sellers, and now they're doing it themselves.
So you're saying it's a bit hypocritical to a degree?
It's not a bit, it's a lot hypocritical.
Do you think Asia is better prepared to tackle a tight energy market, particularly a tight natural gas market, for the next couple of years than Europe is, perhaps?
No, I think Asia is actually in a tougher position. Some of the advanced Asian countries that don't have a lot of conversion to different fuels would have a more difficult time if they don't secure. But some countries that go much more on coal and fuel oils may be able to withstand less gas in the future.
A couple months ago, you promised not to divert cargoes of LNG that were headed to Europe that you could potentially divert to Asia. Now, that was a pretty easy thing to say, I think, when you said it, because the prices for spot going to Europe were much higher than what they were in Asia. Is that going to be as easy to say to some of your biggest clients when you're saying, oh, no, we're keeping our supply going to Europe?
No, you see, when we said it wasn't about the price issue. It was in the beginning, before we even knew what was the ramifications would be and what the prices would do, and the prices weren't as high as they became later. So if you look at when we actually announced it was much earlier than the prices. I understand what you're saying, but it's difficult to judge what's going to happen and how long we'll remain with that, because it can be an infinite thing where we can divert. But for now, we're not diverting.
We're heading into COP27 in just a couple of days. As one of the world's largest LNG exporters, what does Qatar want to see come out of this set of meetings?
I think the realization, like many European countries, that gas is part of the solution and that gas is needed for sustainable development around the world. So for you to have basically a supply source that is a baseload for you when the wind does not blow, when the sun does not shine, and when it's coupled with carbon sequestration, the best basically equipment the money can buy from an emissions point of view. It's coupled with some renewable to power it. It also has methane abatement built in. When it has all these characteristics, like what we have in Qatar, as the North Field East and South is the lowest carbon intensive LNG project on earth ever built, then I think it has to be part of the solution. And gas in this form is a destination fuel and not a transition fuel. But for you to achieve the transition that you want, you have to replace coal, you have to replace some of the liquid fuels, and that the only way to do it is with gas.
Such a timely chat there with Saad El-Kaabi, the Qatari energy minister, speaking to Simone Foxman yesterday. We still have much more to come. This is Bloomberg.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless possibilities. Before you change the world, Bloomberg.
We heard last week that Saudi National Bank is taking a 9.9% stake in Credit Suisse for up to $1.5 billion. The Gulf lender says the transaction unlocks the potential of exploring a strategic partnership to develop the asset management and investment banking scene in the kingdom. Let's get out to the S&D chairman, Ahmad Al-Khudairi, who joins us now from Riyadh. Ahmad, you got quite the deal at a significant discount, but there's a reason why Credit Suisse stocks are down 55% so far this year. What kind of guarantees did you get for you to come on board?
Well, thank you for having me this morning, Yusuf. This is a normal investment. There are no guarantees per se. What there is a turnaround plan and a restructuring plan, which we have studied. We like the story. We like the new leadership in the bank and their resolve and conviction to go ahead and execute on the turnaround plan. And we're quite optimistic if they do deliver on the plan. This bank will yield some very interesting value accretion on a standalone basis for us.
How are you going to finance this stake at 9.9%? Is this going to come out of your cash balance? How are you planning to structure it?
Absolutely. I think we need to take a stock of the context of the size of this transaction. It represents 2.2% of our investment book. It represents 3.5% of our tangible book value. So it's it's about 5 billion riyals. The number of times per annum that we do 5 billion riyal tickets is quite frequent. So from a size point of view, this is a standard normal course of business type of as far as size is concerned.
Are you considering giving Credit Suisse a loan or convertible debt or even additional equity at this point?
Additional equity is out of the question. We have stated that we like where we are at 9.9%. To go beyond 9.9% would trigger some regulatory and accounting. We go into a different hurdle level or different reporting level vis-a-vis accounting and regulatory matters. And at this stage, we're not interested in becoming in moving from being just a tactical investor into a shareholder, even into a different category of our relationship with Credit Suisse.
I mean, how useful is a small stake if you don't get a seat on the board?
Well, again, like this is really a tactical investment. We believe that we can derive a lot of value, and if we look at it, and we did look at it on a standalone basis of just an investment that we sit on for 3 to 5 years, we believe there is very excellent, not very good, but excellent return potential from it. Beyond that, if we are able to create some opportunities that are relevant to our market vis-a-vis expanding our service and product suite in private wealth management, in asset management, and in corporate and investment banking by tapping into the know-how of origination and distribution, tapping into the know-how of how to service the ever-increasing sophisticated middle-class base of Saudi Arabia, then that's icing on the cake. But the cake itself is the standalone investment, and we're quite bullish on the standalone investment.
Bloomberg Intelligence has done some deeper analysis, and their thinking is maybe this is going to be like the SAP-HSBC partnership, just in terms of being able to visualize the kind of depth of this relationship. Is this what we could use as a comparison? Is that a fair point?
I have not studied that particular relationship. I would like to think that we will have, once the dust settles, we want to give Credit Suisse the chance to let the dust settle, for them to roll out the execution plan, and they're very busy. But sometime in the next few months, we will sit down and engage and see how we can develop joint initiatives to better cover and better service our market. As you well know, Yusuf, when we're the largest IPO bank in Saudi Arabia by far, and the largest M&A bank. And as the companies that we bring to market are bigger and more sophisticated, you need coverage of different type, right? You need industry experts, and as we speak today, we actually do this in conjunction with all of the main banks of Wall Street.
Okay.
Credit Suisse First Boston has been, or CSFB has been out of the market. I think this is a great opportunity for both of us, for us to bring them into the market, and also to tap into their knowledge base out of New York vis-a-vis corporate investment bank, and out of Switzerland vis-a-vis PWM and asset management.
What about the broader plan here? Is this a first step, as you know? And I know so far you've said no, but many look at Saudi National Bank as a potential Saudi corporate champion and sort of involved in other parts of the world. So would it make sense to look at other deals as they emerge? Are you open to those as they come up?
We certainly are open to any deals. If they're opportunistic, if they make economic sense for us, absolutely. But if you're, if you're thinking that we're going to go out and buy a European bank and or something like that, that is not in the cards right now.
Ahmad, thank you very much for that, giving us a bit of perspective then on a significant transaction for Credit Suisse and for the Saudi National Bank. That was Ahmad Al-Khudairi, the chairman of SMB. So much more to come. This is Bloomberg.
Strong enough to stay. We will never, no, we will never, no.
From the world of politics to the world of business. Balance of Power with David Weston. News, analysis, insight from and about politics power players. Weekdays. This is Bloomberg.
Wheat futures surged after Russia pulled out of an agreement to allow grain exports from Ukraine through the Black Sea, a deal seen as critical for easing tight world supplies and controlling global food inflation. Countries in the Middle East and North Africa may be among the worst affected. Simone Foxman has more from Doha. So Simone, this latest breakdown in the deal, what do the two sides say?
Well, Russia says some of its ships anchored off a port in annexed Crimea were hit by aerial and underwater drones. They blamed this on Ukraine, which denied that they were behind the attack, and also the extent of the damage here really unclear to outside observers at this point. But it's important to note that there had been concerns raised by Russian officials, particularly about this deal in the past. They've been very critical of it, and that had sent a little jarring of concern through wheat markets, through agricultural markets in general. Ukraine, for its part, had said the Russian forces were delaying ships that were moving between Odessa, a key port there, and Turkey, trying to get out of the Black Sea. So they were critical as well of Russia's role, and so there were a lot of concerns that this deal wouldn't be renewed when it expired on November 19th. Of course, now a cutoff to the deal coming even sooner. Ukraine says this effectively stalls 200 ships that were part of this. That had a really big impact on North Africa, in particular Egypt, for example, getting 80% of its grain supply from Russia and Ukraine. They say they have 5 months in storage. The diplomacy is on, the UN, Turkey, all involved. But at the moment, we kind of got to sit and watch here and see what happens and whether we can get to any kind of resolution.
Yeah, we had some data out from Saudi Arabia just in terms of their real GDP growing by what is 8.6% in the third quarter. This is the flash estimate. In the same time, I'm having net foreign assets to look at that surged to about $449 billion in September. What is the impact?
Yeah, that's the highest number in terms of net foreign assets since 2020, and the biggest jump on a monthly basis since June. And remember, back in June, we were talking $110, $120 a barrel oil prices. Stunningly strong economic growth, as you said, Yusuf. We've really heard this Saudi-first narrative, both from the likes of our opinion columnist Javier Blas, but also we're hearing this from Saudi officials as they try and put into context their push for OPEC Plus to cut production, make money on high oil prices while the getting is good. But you have to think about this in the context of the U.S.-Saudi relationship, because that message may have gotten dulled. RBC, for one, says the failure to connect scenario, the risk of a failure to connect scenario is high at this point. And new reporting from NBC indicates that one of the responses the U.S. may take to Saudi's decision in terms of OPEC Plus is slow rolling deliveries of arms and arms sales generally, including Patriot missiles. That, however, does have security implications for U.S. forces. We'll see if this comes to fruition as a response to that Saudi measure.
Simone, thank you for that. That's Simone Fox by the Qatar Financial Center in Doha. Why don't we recap just these growth numbers from Saudi Arabia? 8.6%, which is significant. This is for the third quarter. The number is 5.6% for the non-oil sector. I'm being told that we are down from about 12.2% in the prior quarter. But this gives you a sense of the scale and magnitude of Saudi economic momentum at the moment, which is one of the big themes at FII last week. The fastest growing G20 country, and that is likely to continue to resonate to the end of the year and into 2023. What's going to resonate this week is the Fed, the FOMC. Looking here at equity futures for the U.S., we're called a little bit lower here on the NASDAQ, down about 0.3%. Bear in mind, of course, that it is all about a potential Fed pause. If we get a hawkish Fed, all bets are off. That's what Gina Martin-Adams highlighted from Bloomberg Intelligence. I want to get to treasuries as well. We're holding steady at U.S. 10-year yields. We're coming off the back of the longest weekly streak since 1984, right? So we were down. Yields currently just a little bit higher here. Bond traders are going to be wary. And the Pulse survey from the Markets Live team suggests 47% of respondents are on the sidelines going into this FOMC. Looking at energy prices as well as the ADIPEC coverage from Abu Dhabi continues. We'll be speaking to top CEOs and government officials, Brent and WTI, just giving back a little bit of the price momentum. Coverage continues from London and the rest of the world. This is Bloomberg.
My grandfather got into the mutual fund business because the average investor could not get a diversified stock portfolio, and it was too dangerous to put, your entire savings in just a couple of companies. So the mutual fund was created to give a diversified expert management at a reasonable price. Today, we have a phenomenon where companies are waiting much longer to go public. And so in 2000, the average company went public after 3 years. Now, companies are waiting 9 to 10 years because there's so much money available in the private markets. As a matter of fact, they're half the number of public companies that there were in 2000, and they're 5 times the number of private equity-backed companies. So just from an investable universe, you look at the private markets, and it's significantly bigger. So the question is, that return that used to be captured in the public markets is now captured in the private markets. But the problem, as you know, is you're really tied up for a long time when you invest in a private equity fund. And so trying to figure out a way to solve the same problem my grandfather was trying to solve, which is how do you bring those returns responsibly, the democratization of the private markets to the retail investors. And I describe it as a bit of like running with scissors. Scissors is a great tool if you use it appropriately. And so we're focused on trying to figure out responsibly bringing it in to the average investor.
We will never break. We will never break. Build on a shine strong enough to stay. We will never.
When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
This is Bloomberg Daybreak Europe. Happy Monday. I'm Danny Berger in London with the stories that set your agenda. Food security threat. Ukraine, Turkey, and the UN plan to resume grain shipments after Russia withdraws from a deal allowing safe passage. Wheat prices spike. Historic comeback. Lula narrowly defeats incumbent Bolsonaro to win Brazil's presidential election in a dramatic turn to power for the left-wing politician. Plus, a week of jumbo hikes. The Fed and the BOE are expected to boost rates by 75 basis points, defying mounting recession risk in the face of stubborn inflation. Well, we start this Monday off the back of a 2-week rally in this equity market. It is a very strong bear market rally, but can it continue as we face down the threat of a Fed hike this week that by all accounts is expected to be 75 basis points? But will it be the last 75 basis point hike from the Fed? That's at least what we're getting out of Goldman Sachs and Jan Hotzis and team saying that after this, yes, we'll have a higher peak. It might be around 5%, but the pace of getting there will now be slower. What does that mean for your equity market? Well, we are seeing some weakness when it comes to S&P 500 futures, but again, not surprising to see consolidation after 2 strong weeks of equity rallies. MSCI Asia Pacific, that's up nearly 1%. It is a little bit weaker in China, some challenging data coming out this morning, as well as some bad news coming from the real estate sector, major resignation from one of the top firms there. And your Stoxx 50 futures, those higher as well, up 0.5% following on from that Friday rally. Switching it up again, that those expectations for 75 basis points means that we are seeing yields move back higher. They moved higher on Friday. We got back above 4%, but for most of the week, it was a rally in your U.S. 10-year, in the entirety of the bond space. In fact, it was the first week in 13 that we saw lower yields. Perhaps we need to readjust if we are going to get 75 from the Fed. And again, as Goldman says, a higher peak. That divergence in yields, of course, means that we are seeing weakness coming through the floor for the yen yet again. And wheat prices, I mentioned this at the top of the show, Russia withdrawing from that safe passage agreement means that we've seen yield prices spike up 5.5%. Of course, we're going to get some more detail on that. And speaking of which, let's get to all of our reporters from around the world to break down our top stories on the Ukraine grain story. We have Darna Krasnoludska out of Kyiv and Sibylla Gross from Melbourne. And he's normally here as the co-anchor on Bloomberg Daybreak Europe, but Manis will join us today from the ADIPEC conference at the epicenter of energy markets. Now to the wheat story. Ukraine, Turkey, and the United Nations have agreed to have food shipments continue to sail from Ukraine today. The continuing exports are a pushback against Russia after its withdrawal from a deal to allow safe passage of Ukraine's grain exports. For more on this, we're joined by our Kyiv bureau chief, Darna Krasnoludska, and our Asia agricultural reporter, Sibylla Gross. So, Darna, let's start with you. What does this latest development mean? Can grain shipments keep going, or is it going to be difficult now?
Good morning. So it's a very good question. Nobody knows. Yesterday, Turkey, the United Nations, and Ukraine agreed that ships should move. And today we expect 12 ships out of Ukraine and 4 in, loaded with the grain, of course. Russia said before that it cannot guarantee the safety of the passage. So yes, it's a test for the United Nations, it's a test for Ukraine, and it's, of course, it's a challenge for Russia. How it will react is a big question.
And then it's also a challenge for the world that has already seen higher food prices. Sibylla, let me bring you into the conversation. How significant is this development when it comes to the global grain market and food security more broadly?
Look, it's significant, Danny. The fact that we've got some ships pushing back and shipping grain still, even though Russia's not agreed to go ahead with the deal, is a little optimistic. But, you know, ultimately, this is fundamentally telling us the long-term supply prospects out of Ukraine are looking pretty poor. And, you know, this time around, we might not see crop futures jump quite as much as we did earlier this year when we had no idea about the amount of tonnage we'd be losing in terms of supply to the market. But basically, the countries that do rely on Ukraine for that grain are going to have to source it from elsewhere. And that's the real problem because we don't have a lot out there. It's a pretty tight supply picture.
So, Darna, we have heard some news that perhaps Turkey, the UN, Ukraine, they're going to go ahead with exports. What will that look like today?
So, for example, yesterday, already one ship was ready to go with 40,000 tons of grain heading to Africa. The Ukrainian president said again yesterday that with the number of ships that is near Ukraine now, 2 million tons of grain is ready to be shipped out of Ukraine. And mainly the food will go to Africa and to Asia countries.
Okay, Darna, Sibylla, thank you so much for joining us this morning. That's Darna Krasnoludska and Sibylla Gross on the latest with this wheat story. Now shifting to another commodity, oil edged lower as weak economic data from China fanned concerns about energy demand. But on the month, crude is still up around 10% after decision by the OPEC Plus alliance to make sizable cuts for more output. For more, let's bring in Manis, who's at the ADIPEC conference in Abu Dhabi. So Manis, another day, another city for you. Tell me about the challenging backdrop for this oil prices at the ADIPEC conference.
I think you have this confluence of impact here. We are talking about price caps from the US on oil, Russian supply coming away from Europe, gas price caps. And yet at the same time, you have a gathering here of oil ministers, the Saudis, the Emiratis, the Nigerians, along with a host of other OPEC members. We're galloping towards December the 5th. Will OPEC Plus do another cut? Is there a consensus building? Is that part of what will be discussed here at ADIPEC in Abu Dhabi? So that's on the supply side. I think we just had a conversation with Claudia Descalzi, who made it very, very clear that you've got a temporary sticking plaster on the gas crisis, the energy crisis in Europe. he also sounded very skeptical that you were going to get a price cap delivered because it's not a homogenous beast, as you know. So I think politics between the US and Saudi Arabia, how fractured is that relationship, supply on the OPEC side, and the debate about a global recession, as you said, the Chinese data this morning adds fuel to that narrative of a slowdown in Europe, a slowdown in China.
Well, at the same time, Manus, I know you've spoken to Eni, and there in general will be a lot of oil majors at the conference. What do you expect, and what have you heard the message coming from them?
I think if you read the stories on Exxon and Chevron, $30 billion in terms of profits for this quarter, you're looking at record profits. Eni had a gas trading. They trade in gas. They made $2 billion in the space of 9 months. Yes, there's a number of elements that go into that. But you've got to ask yourself, Chevron are trading, BP are trading, Shell are trading, Bernard Looney's here as well, I have it on good authority. The trading desks of these houses feast on volatility. They ramp and roll in terms of rampant markets. That is their job. Their job is to manage the flow and trade the flow. But there is also the accusation one could put to the CEO. You have a responsibility to bear in terms of the volatility that's delivered in these exchange-traded products and OTC. The majors are part of the volatility. They're part of these exploding prices and liquidity. So to a certain extent, the ramp and rolling gas prices is delivered by trading desks, not really by deep, deep, deep constriction at all times in the market. Otherwise, we wouldn't be down by 65% from the height. Danny.
Manus, really looking forward to your coverage throughout the week from ADIPEC. That's our very own Manus Cranny. Now, moving to the world of geopolitics, Luiz Inácio Lula da Silva has won the Brazilian election after narrowly beating Jair Bolsonaro in a dramatic comeback. Lula defeated the incumbent with a 50.9% of the vote, but Bolsonaro has not yet conceded. Bloomberg's Sherry On reports from Sao Paulo.
Luiz Inácio Lula da Silva has made a dramatic political comeback to Brazil's presidency. The two-term former president won the runoff by a narrow margin, saying in his victory speech that the economy must improve everyone's lives. The initial market reaction in Brazil-related assets was positive, perhaps a nod to a close election that may force the leftist former president to move more towards the economic center. As the congratulations start to roll in from world leaders, including President Joe Biden, Lula says Brazil will regain its credibility to lure investors. Sherry On, Bloomberg, Sao Paulo.
And let's take a look at that market reaction that Sherry Ann was just mentioning. A Japanese-listed ETF that tracks Brazil's benchmark equity index at one point was up more than 5.2%. It's come back off of that a bit now, just up 3 1/3. But also just keep in mind, it is light volume on this. It is listed in Japan. It's not the most heavily traded thing, but still indicating a more positive response, at least in the Brazilian equity market. Let's take a look at some other key things that we're going to be watching out for throughout the rest of the week. So today we're going to get Euro area CPI. That'll hit at 10 a.m. UK time. The ECB's chief economist, Philip Lane, he's also due to speak at an event in Copenhagen. That'll be later today. Then tomorrow on Tuesday is China's Caixin manufacturing PMIs and Australia's rate decision. That's going to be followed by the Fed decision on Wednesday, where again we're expecting a 75 basis point hike for the 4th straight meeting, but it'll be the last one. And that's not all when it comes to rate hikes. We're also going to have the BOE rate decision on Thursday, and then U.S. data on initial jobless claims, factory orders, and services. Come Friday, it's the U.S. non-farm payrolls. It is jobs week. Employers are expected to have added about 200,000 jobs in October. So there's a whole lot to keep you on your toes this week. Coming up next, we're going to talk about all of it with Yves Bonson, Julius Baer, CIO. Plus, Lula da Silva narrowly wins the Brazilian presidential election in a dramatic comeback. We're bringing more on that story. This is Bloomberg.
A digital-first approach to the future of work is where the industry and all companies will be heading.
Could the future of work not be at home or in the office, but in the metaverse instead?
There's that word, metaverse.
Doing well. How are you doing?
When I think about the metaverse, I think about immersive experiences that have a sense of active presence.
Wow, look at this. This is me. The metaverse is projected to become over $1 trillion market by the end of this decade. And whether you know it or not, you'll probably be working there in the future.
We're moving into a world where we're going to be interacting with computers with our bodies.
This is definitely trippy.
I think the adoption curve is going to be slow.
It's
doing
weird.
Like a weird floaty thing right now.
Oh, look at you. You have no legs.
It's kind of a fun world, and we're just at the very beginning of a very long journey.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Right now, all central banks are playing tough and talking tough.
Investors obviously skittish as the Fed pulls away the punch bowl of easy money, and that's going to lead to a lot of mispricing and uncertainty.
We're not only in fiscal dominance in this game of chicken between Treasury and central bank, we're in what the folks at the Bank of International Settlement call a debt trap.
It's really a Fed-driven downturn that we're seeing, and it's going to take the Fed to correct it.
Maybe the Fed could signal a move towards a smaller increments of rate hikes next week after they meet.
The labor market is still strong, but it requires a Fed that has a lot more skill and a lot more luck.
That means you need to see higher unemployment. And if that's the goal, they are failing miserably.
I think the bond vigilantes are back.
some of the guests throughout the week on Bloomberg TV responding to our MLive Pulse survey, which asked, what's your FOMC trade ahead of this week's Fed decision? For more, and to get his trade, we're joined by Yves Bonson, CIO of Julius Baer. Yves, thank you so much for joining us this morning. I want to start with a piece out from Jan Hatzius and team over at Goldman Sachs, because it kind of sounds like what we heard in that clip from HSBC. Let me read it to you, Yves, and get your response. So they write that Powell will likely note that the FOMC aims to move deliberately, but more cautiously, now that fund rates is in restrictive territory, and that the full impact of the economy of the very large tightening in financial conditions to date is not yet clear. They wrap this all up by saying, yes, they're going at a slower pace, but the peak will be higher at 5%. Yves, what do you make of that? Will this be a slower but higher peak Fed?
I think so, although I'm not sure they will communicate this in as a straightforward manner. The Fed wants to tighten. The Fed understands there's a lag between tightening and the transmission of the tightening to the system. So far, the system has been extremely resilient, quite frankly, far beyond what I ever expected to be able in terms of absorbing such a rapid cost adjustment in the cost of capital. And I think the Fed will of course, deliver what the market expects, as it usually does. The question is what then? And then the market is pricing by next spring's 5% Fed fund rates. This is a massive tightening cycle, one of the fastest in history. And I think essentially it's in the price right now. And don't forget that above and beyond Fed fund rates, QT continues. So even if the Fed pause, the tightening actually continues.
Have we fully digested that? Yeah, sure, markets might be pricing in 5%, but do we truly understand the impact of that plus continued QT?
Well, I think the interest rate move is in the price. The question is, how will capital markets and the economy absorb QT? And there it's a function of bank lending. Bank lending has accelerated to a low double-digit growth year on year recently. That actually validates the need for QT and enables, again, the markets and the economy to absorb that. I think that's the one key stats to track and monitor is actually banking, commercial, and industrial loan demand.
But can the world really handle more debt? It already feels like a world awash in too many bonds and not enough buyers. Where will that appetite actually come from?
Well, that's precisely the reason why there's a limit to that tightening cycle. And I think everyone, starting with the S&P 500, understands this. There's no way we can endlessly tighten monetary policy without something to break in the system.
What does that look like? What does that break look like, Yves?
We don't have any evidence of something breaking yet. Actually, we have the evidence of a system that is resilient and has adjusted to this very, very rapid adjustment in the cost of capital. We have exceeded extreme financial repression. That financial repression of a more moderate kind will continue for years to come, precisely because of the record amounts of debt we have to ensure service of.
Speaking of that resilience, looking at what the equity market has done over these past weeks have felt extremely remarkable given the risk that lay ahead, given the tightening cycle, given an earnings season that has been inconsistent. What do you make of it? What do you make of this rally? Can it continue? Are you buying?
Well, essentially, we think 3,490 on the S&P 500 at the opening after the September CPI was published was probably the low for the year. And we think, unlike the bear market rally of the summer, the rally that has started since then actually has legs and will carry us well into 2023. If you look at earnings, I think, and the market has essentially telegraphed this last week, it would be a mistake to make a read across from the results of the digital platforms for the broader market. To a large extent, what happens to the leading US digital platform names is self-inflicted. This year, capital expenditure in the S&P 500 has increased to 20%, more than double the pace of revenue increases. And the digital platforms, the so-called FANGs, have been responsible to a large extent for a big chunk of that capital expenditure increase. So the capital intensity of their business model has tremendously increased, and this is starting to pressure their historically unmatched ability to produce free cash flow. If you look at the broader market, it's a season of earnings dispersion. You have some very good results, which are hardly actually making the headlines, and you have some disappointment. The mood is bearish. People want to find a rationale why the market will go lower. So I think there is a bias here towards negativity, but I think it's more nuanced than that in terms of corporate profits.
But looking at someone like an Amazon, Yves, saying that our holiday season is going to be one of the weakest on record, I understand perhaps they've overspent when it comes to their distribution channels, but can you not extrapolate something from the American consumer? If you're looking at someone like Amazon, just such a big powerhouse when it comes to consumer goods, seeing a slower peak holiday season?
But look, we had in the wake of all the distortion induced by the lockdowns during the pandemic, we've had during the reopening phase of the economy, a bubble in goods consumption. And we are in the phase where that excess of goods consumed is in the process of being reverting and normalizing. So, of course, leading retailers, and Amazon obviously is one of them, are at the forefront of that adjustment. If you add to this the CapEx issue that I just mentioned, it's clear that at the moment the company faces some significant headwinds.
Can I take you through this challenging calendar we're about to get in? I think it's about a 4-day time span, and just get your take on what lays ahead as the biggest risk. So we have the Fed decision. Then after that, we'll have a Bank of England decision. 2 days later, we're going to get a jobs report. A few days later, then we have the midterm elections in the U.S., followed by a CPI release. That feels, again, like a very challenging calendar. Is there anything on there that you'd say, okay, this is a big risk event. I'm going to take some hedges out for it?
Yeah, the biggest risk, I think, in the string of data that we have coming is clearly the CPI for October, because the market has been able so far to absorb CPI disappointments, including the latest in September. But from October onwards, the number published this month, there is expectation that inflation starts to behave much better. So if we have again a disappointment on this for reasons we have not expected and discounted, that could be a trigger for retest of the low.
Okay, Yves, thank you so much for joining us this morning. Yves Bonson, CIO at Julius Baer. Now coming up, we're going to get an update on what's moving Asia markets today. This is Bloomberg.
The markets expect another rate hike.
Investors obviously skittish.
What the Fed do on November 2nd is key to everything.
But where will the Fed go from there?
No sign it is ready to stop tightening.
Everybody talking about a step down.
They're going to wimp out and they're going to big.
Trust Bloomberg for the fastest coverage and exclusive analysis.
Do we want this Fed to force a recession?
The Fed's going to torpedo momentum.
In markets like this, everyone's a long-term investor.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
When you think space, you probably think one space agency that travels under the radar is ESA. Which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Command the ground, do you copy? Copy.
If we want to have a successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news. You will get insight into limitless...
Welcome back to Bloomberg Daybreak Europe. I'm Danny Berger in London. Let's get to the first word news. With that is Simone Foxman in Doha. Simone.
Hi, Danny. Wheat futures have surged after Russia pulled out of an agreement to allow grain exports from Ukraine via the Black Sea. Moscow claims, without citing evidence, that drone strikes against its naval fleet might have come from a grain ship. Ukraine, Turkey, and the UN have agreed vessels carrying food from Ukrainian ports should sail on Monday, pushing back against Russia's decision. South Korea's president has visited an altar set up to mourn the 154 people killed in a cloud crush on Saturday, as an investigation is launched into the deadly incident. The tragedy happened in a narrow alley as tens of thousands celebrated Halloween, the first such festivities since COVID restrictions were lifted last month. Yonhap News says nearly 100 of those killed were women and at least 26 were foreigners. Reports now say more than 140 people were killed when a pedestrian bridge collapsed in the western Indian state of Gujarat. Hundreds were said to be on the suspension bridge when it gave way, with many still missing. No immediate cause has been given for the collapse, but local reports say the colonial-era bridge had just reopened after renovations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Danny.
Simone, thanks so much. Simone Foxman there in Doha. Let's get you set up for this trading.
Apple's delaying its next major iPad software update, iPadOS 16, by about a month from September to October. Apple made the decision for a number of reasons, including a still buggy Stage Manager multitasking interface and in order to link the launch closer to the more similar macOS Ventura. Still, it's an unusual move. Since shifting the launches to the fall in 2011, Apple has released its new iPhone and iPad software updates simultaneously each year around September. By staggering the releases, users may find some issues around compatibility with cross-device features like retracting and editing messages in iMessage, the new shared iCloud photo library, and the new feature for transferring FaceTime calls between iPhones and iPads. It will also make it a bit harder for developers to launch apps that run on both the iPad and iPhone that require new APIs and features found across iPadOS 16 and iOS 16. Regardless, it was still, of course, the right move. Stage Manager on iPadOS 16 is still quite buggy, I don't find it particularly intuitive, and it's not compatible with most iPads and many third-party apps on the App Store. The feature clearly needs some more polish, and complaints from consumers about Stage Manager will now no longer probably overshadow the earlier launch of the iPhone 14.
You will shed light on dark matter. You will make aging optional. Because when you subscribe to Bloomberg, you won't just get news, you will get insight into limitless possibilities. Before you change the world, Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
Great question. Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
Good morning. Happy Monday. This is Bloomberg Daybreak Europe. I'm Danny Berger in London with the stories that set your agenda. Food security threat. Ukraine, Turkey, and the UN plan to resume grain shipments after Russia withdraws from a deal allowing safe passage. Wheat prices spike. Historic comeback. Lula narrowly defeats incumbent Bolsonaro to win Brazil's election in a dramatic turn to power for the left-wing politician. Plus, a week of jumbo hikes. The Fed and the BOE are expected to boost rates by 75 basis points, defying mounting recession risk in the face of stubborn inflation. Now, despite that expectation for 75 basis points, we have a note out from Goldman Sachs, Jan Hatze, saying that after that, the pace will slow. It was an idea backed up by Yves Bonson, CIO of Julius Baer as well, who says that the bottom is in for this equity market. We did have 2 weeks of rallying for U.S. equities. Futures, they do look a little softer this morning, down 0.3%, though it is gains when it comes both to Europe and the MSCI Asia Pacific Index. We'll get more details on that from our reporter Annabelle Jewelers in just a moment. Looking at the cross-asset picture, though, yields are moving higher in the U.S., breaking back above 4% for your U.S. 10-year yield. But yesterday was the first week of lower yields in 13 weeks. It's that turnaround narrative, that step-down narrative that is taking hold, perhaps not this morning, which also means that there is a weaker yen looking at that interest rate differential. Finally, wheat prices, I mentioned this before, those are surging after Russia backed out of that safe passage deal, though we are still expecting wheat to be moving through out of Ukraine thanks to the UN and Turkey. Let's dig more into that Asia equity story. They are starting the week on the front foot, rising for a fourth session out of the past 5. Let's bring in our reporter from Hong Kong, Annabelle Jewelers. Annabelle, walk us through those moves.
Yeah, well, Danny, in the session today, we're really fairly risk-on across the board. If you bring up the GMM function, you can see here that basically every single equity market is in the green. A picture really of just how much traders are still focused on those corporate earnings out of the US, the likes of Apple, Caterpillar, helping to buoy optimism here around the equity space. In terms of what is the laggard, though, that's still China for us today. We've got the CSI 300 extending its losses into the afternoon trade, and then also reflected in what we're seeing in the yuan as well. That's off around 0.4%. So not just a story of dollar strength, it's also down to what's happening in the fundamentals of China's economy, because we did get some PMI data out earlier. If you just change on now, we saw the services and the manufacturing gauge both slipping below 50. So really an indication to us of just how much of an impact these COVID zero policies are continuing to have. So in terms of the reaction we've had so far from economists on this, well, HSBC says you're going to need to see more policy easing here to try and shore up growth. Mizuho is another also saying that basically it shows us how much industrial demand is slowing not only in the country but offshore as well, and then also the impact of COVID curves, because this was a period as well when we saw more COVID lockdowns across the country, cases now at around an 80-day high, and then also ING saying if you think the numbers in October are bad, wait for November because worse is to come.
It's not just COVID, though, and the data there, is it, Annabelle? We've also seen some more signs of distress in China's property sector.
Yeah, that's right. This has been a big corporate story for us today. So essentially this stock here at the top, Longfor, it is the 10th biggest developer in China. Its chairperson stood down today, so that was a big unexpected move for the markets, and we saw these other developers selling off as well. This is really a lot of question marks here around why she suddenly stood down and the timing of it, given this is a property sector in crisis. Change on now quickly. It's also fed across the metal space today as well. We are seeing those declining, not only down to developers, also PMI data, Danny.
Annabelle, thank you so much. Annabelle Jewelers there in Hong Kong. Let's turn to Brazil now, where Luiz Inácio Lula da Silva has won the Brazilian election after narrowly defeating Jair Bolsonaro in a dramatic comeback. Lula defeated the incumbent with the 50.9% of the votes, but Bolsonaro has not yet conceded. Let's speak now to Bloomberg's Rodrigo Orihuela. So, Rodrigo, what does Lula's win mean for South America's largest economy?
Well, as you said, this is absolutely an amazing comeback from a political point of view. He was in prison for 580 days, came out in 2019. And one thing that's very clear from this election is that both candidates had a huge level of rejection from voters. The thing that really supported Lula, though, was that he sought to build a very wide support base with people who weren't his traditional supporters as well. Just to put that into some context, his vice president is somebody who was his main rival, sorry about that, he was his main rival when he was president many years ago. So he tried during the election campaign to reach out and try to get over that rejection he had. And now the question is, will that continue in his government? Will he try to govern only with his people and his party, or will he try to amplify that support and those collaborators and those people who work with him and try to support himself on the center-right as well as on his traditional base?
Rodrigo, you are a TV professional, quick acting, getting that earpiece back in. Okay, so what happens next with Bolsonaro? Because we haven't heard from the president yet.
That, I think, is it's the million-dollar question, to use the old cliche. I mean, he's basically locked himself up with a very, very close, tight-knit group of people, probably his sons, according to local media reports. And in the build-up to the election, there has been a lot of noise about how he is going to behave. There's been claims from his camp that there was fraud in how advertising was being managed for the mandatory advertising space for candidates. There was also some noise about how certain parts of the security forces were going to react if he didn't win, because he has a strong base between those forces. So the question there is, what's next? Will he come out and say, I concede, or will he try to fight this either on the street, in courts, or in some other way? A leading voice in Parliament who worked with him but was not one of his closest allies said already that they had to concede victory to Lula. Now the question is, will he do the same? He's always portrayed himself as an anti-establishment person. We'll see if he continues with that.
Rodrigo, thank you very much. Bloomberg's Rodrigo Orihuela there. Joining us now to get more into this is Emer Daly, emerging market macro strategist at NatWest Markets. Thank you so much for joining us this morning. I want to start with where Rodrigo left off. Talk to me about the tail risk, the swing factor of potentially a contested election if Bolsonaro does go that route.
Yeah, absolutely, and I think that is a real risk for this. We actually think there's very little economic divergence between the two candidates, given that they face significant hardship in terms of economic realities. I guess the risk is, will we have an easy transition of power? So I think markets right now are really focused on what Bolsonaro actually does. I think his silence at the moment is quite deafening. Some of the media reports on the ground have said that, he won't contest this. I think we had reports from him on Friday effectively saying that he would respect that even, one vote above the majority would see it hand off to his rival. So we don't expect a contested election, but definitely that will be the most negative in terms of macro investing for Brazil.
This is interesting because, in terms of how much a different President Lula will change things, because we've seen, for example, the real, one of the best performing currencies year to date. So is the impetus for markets just bigger than the political story?
Yeah, I think, these are very unorthodox candidates and actually for very different reasons. But I think in this there's a lot happening in the global macroeconomic environment. And I think when you're an FX or rates strategist, you're very much looking at, well, what are the inflation pictures? What is the real interest rate that assets offer you? And Brazil just stands out. I mean, it's offering investors the highest real interest rate in emerging markets. It's got a very resilient trade position. It's actually got a positive basic balance of payments, and that's improving. So we think, the ability of any new candidate to really scupper that is limited. I think, both candidates, first of all, they don't have an unfettered ability to enact policy. They have to answer to a Congress, and they're capped by a significant spending cap.
And I guess Latin America in general has this benefit of being some of the first countries to start this rate hike cycle. But what about the political risk of a fiscal government who does want to do more spending? And we've seen it in other nations that in a cost of living crisis, you want to spend more. Certainly Lula has made a lot of promises on the campaign trail. Does this question of funding, of potentially acting differently from the monetary authorities, is that a risk at all?
I think in this environment, that is actually the key risk, right? Is if you're running a current account deficit and then you want to run a fiscal deficit, I mean, investors are really going to balk and run for the borders. But, we did see Lula in his acceptance speech actually saying that, we want to gain the credibility of foreign investors. I think that's a real sign that he is pragmatic. Back in 2022 when he first took power, he campaigned on a very leftist, very fiscal expansionary campaign trail. He actually was much more pragmatic when he came to power. And look at him, he's building a broad coalition of Bolsonaro's opponents. He's, has his running mate as someone who is formerly an opponent of his and has a lot more credibility. So I think actually the real signs that are coming through from Lula are quite pragmatic. And I think it's one of the countries where we don't see that much risk from fiscal slippage.
Emer, I want to take you to perhaps literally the other side of the world, in Ukraine and wheat. So we have Russia pulling out of the safe passage agreement. We're still likely to get some wheat flowing through thanks to Turkey, thanks to the UN, but we've seen wheat prices spike anew. If we get continued price pressure in wheat, what emerging nations are the most vulnerable?
I really think this is the key risk when we go into 2023. I think most people have been calling that energy prices are going to stabilize and inflation will go lower. The big risk is food prices, absolutely, and especially in terms of fertilizer prices, which are higher. I do think we're going to see global central banks pivot away from just keep hiking endlessly, just higher rates for longer. But I think that risk is higher food prices, and probably it's the senior space which is most at risk because they have higher current account deficits, and there is that risk of fiscal slippage to really try to support their domestic economy.
So then how do you square the two of potentially more inflation coming from food prices, but central banks then that start to back off of the aggressive rate hike cycle?
Yeah, I think it's really negative in terms of your real rate offering to investors, and I think that really is the most pronounced in CEMEA, where if you look at even the central banks, in Hungary's case, they've hiked by over 1,000 basis points. Real interest rates still negative. I think for us, where we're most concerned is Poland. We enacted 2-10 steepener, which has performed very well. We think we're coming into an election year, and definitely the ruling party is really campaigning on we're going to do increased outlays, increased military spending, and as yet they haven't announced anything in terms of how they'll actually fund that. So we're looking at an increase of bond issuance next year, and obviously their current account is significantly wide because of this higher food and energy and work costs.
So how are you trading that then?
So we've enacted a 2-10 steepener via the bond market. We also think there is value in terms of a long euro Polish zloty position. It's actually traded down recently because of speculation. The central bank has intervened to make it quite punitively expensive to short the currency. We think it's actually just a happy coincidence, and we think these are great entry levels to position for that.
Okay, I'm afraid we're going to have to leave it there. Emer, thanks so much for joining us this morning. Emer Daly there, emerging markets macro strategist at NatWest Markets. Now coming up on the program, energy ministers from Saudi Arabia, Kuwait, Iraq, and Nigeria are all at ADIPEC this week, as is our very own Manus Cranny. We're live from the conference in Abu Dhabi next. This is Bloomberg.
There's more activity in the fusion world than ever, and not just in government research labs. There's also an emerging private fusion industry that attracted billions of dollars in capital in recent years.
Governments and private investors alike